It gives me immense pleasure to welcome our esteemed dignitaries, respected session chairs, researchers, academicians, industry professionals, and all participants to the Technical Session 1 of International Conference ICACCF 2026, Edition 3rd, on the theme Business Transformation for Sustainable Entrepreneurship and Value Creation. This prestigious international conference is organized by Amity College of Commerce and Finance in collaboration with the Association of Chartered Certified Accountants, ACCA UK. We are truly grateful for the continued support and collaboration that make platforms like this possible. Platforms that encourage academic excellence, innovation research, and meaningful engagement between academia and industry. Today marks the beginning of intellectually enriching journey where ideas, insight, and expertise will converge to address the evolving challenges and opportunities in sustainable entrepreneurship and value creation. We are especially honored by the presence of our session chairs, whose academic leadership, expertise, and guidance will ensure engaging discussion and high quality deliberations during the sessions. I would like to invite Dr. Atul Kumar Sir to kindly present a Tulsi sapling as a token of gratitude and appreciation to our respected session chair, Professor Madhuvich. Professor Madhuvij is a highly respected academic leader and a senior finance expert with a distinguished career spanning over 4 decades in higher education, research, and professional development. She currently serves as the president and chair of the Academic Council at the Global Risk Management Institute, where she plays a key role in shaping curricula and advancing risk management education. She has also been associated as a visiting faculty with premier institutions such as IIM Raipur, IIM Jammu, and IIM Sambalpur, and has actively contributed to finance education initiatives with professional bodies like ICAI, reflecting her strong commitment to bridging academia and industry. Thank you, ma'am, for gracing this session. I would like to invite Dr. Atul Kumar sir to kindly present the Tulsi sapling as a token of gratitude and appreciation to our respective session chair, CA Dr. Rashita Puthia. Dr. Rashita Puthia is a senior lecturer in accounting and finance at Middlesex University, Dubai. She is a member of Institute of Chartered Accountant of India and senior fellow of the Higher Education Academy UK. Beginning her career in that industry, she transitioned into education in 2011. Her teaching interests include IFRS, corporate finance, business valuation, and corporate sustainability. While her research focuses on Islamic finance, sustainable investing, and authentic assessments, she is currently pursuing her PhD on sustainable investing at Middlesex University, UK. We are delighted to have you with us, ma'am. We are also honored to have Dr. Mustafa Raza Rambani joining us in online mode today. Dr. Mustafa Razarmani is Assistant Professor at the College of Business Administration, University of Corfaka, Sharjah, UAE, and currently serves as the Head of Research Publication at the university. He holds a PhD in Commerce and Business Studies from Jamia Millia Islamia University, New Delhi, and is a gold medalist in Master of Commerce. With over 14 years of academic experience across institutions in India, Saudi Arabia, Bahrain, and UAE, Dr. Ambani has made significant contributions to teaching, research supervision, and curricular development. Thank you, sir, for joining us and being part of this session. I now kindly request respective session chairs to please move towards the sitting area so that we may proceed with the paper presentation session. Day one. रुक जाओ. Before we begin, I would like to briefly share a few important guidelines for the presenters. Each presenters will be allotted 7 minutes to present their paper. The first buzzer will ring at 5 minutes. After that, presenters are requested to conclude their presentation within the next 2 minutes. The second buzzer will ring after 7 minutes and presenters are requested to stop immediately after the second buzzer. After completing their presentations, presenters are requested to wait for questions or feedback from the session chairs. I and now request Mr. Mohit Narang for his paper title Exploring the Relation Between ESG Score and Financial Performance Evidence from G7 Nation to come and present his paper.
Good afternoon, everyone. My name is Mohit, and I am currently doing PhD from the Department of ACCF, that is under MIT University. I am doing PhD under the supervision of Dr. Neha Puri ma'am, who is my guide, and under the co-guidance of Dr. Suman Dot sir. So the topic of my research paper is the exploration of relation between ESG scores and financial performance. As we already know that ESG and financial performance are highly linked, and there have been many research outcomes that have linked both positively and negatively to these ESG and financial performance. So my study is about the energy industry and taking the G7 countries only in that. Sorry. As the energy industry currently stands at the epicenter of global sustainability movement, so ES&G standards prove as the primary driver for global emissions. As the primary driver, these firms are undergoing a fundamental structural pivot towards green business models. So this transition is no longer a choice, but a survival mandate driven by these firms. So despite the push for sustainability in the past, ESG, there is a dilemma in terms of conclusion of ESG, that is it a strategic asset that drives the performance, or it comes out as an operational cost. So that was the objective of my study, to learn that whether ESG provides more benefit to the firms who are taking part in ESG activities, or it comes out as the operational cost. So we have taken dual performance metric in this study by analyzing net income ratio alongside the return on equity. We have bifurcated the study into two models. So the basic model is to learn about the impact of ESG scores, or the relation between ESG scores and the net income ratio, that serves about the operational activities of the company or operational costs that the company is incurring. And the other part is related to the return on equity, that shows the shareholders' perception, how that is affected based on the ESG scores or the activities that the company undergoes. We have taken G7 nations as a neutral experiment, as this research provides a direct comparison between mandatory proactive regulatory requirements like in the Europe to some less market-driven approaches like in the US or Canada. So these were the research gaps based on which we have formed our objectives. First was the metric overgeneralization. As I already said, that previous studies have been often treating financial performance as the only outcome to learn about the ESG and financial performance relationship. But I have taken the shareholders valuation as well to my study to provide a comparison about the ESG and financial performance relationship between operational cost and the return on investment. There were institutional blind spots observed, as the existing research frequently ignores how national regulatory frameworks affect this relationship. So like in the European mandatory requirement, there is more stringent regulations, but in North American or Canadian sectors, there is a more market-driven approach. So they are more focusing on the market value of the firm that comes under the return on equity. There was one lack of crisis also observed, that there is shortage of empirical evidence on G7 firms during the simultaneous global shock, like the COVID-19 was also one of the global shocks that the world suffered from. Similarly, the overlap of the 2022 global energy crisis, that was due to the Russia-Ukraine war. So that has been considered in my research. So these are the three objectives that we have formed. First one is to evaluate the dual impact of ESG. First one is on the net income ratio, and the other one is on the return on equity. And secondly, we will investigate the moderating role of the frameworks that I mentioned, that European countries have more stringent frameworks, and the other countries are not having such stringent frameworks. And third one is to examine the persistence and resilience of ESG impact during the global crisis periods. We have taken 2022 as the crisis year due to the Russia-Ukraine war and the post-COVID scenario. So this is the research framework. Three hypotheses were formed. First one is to see the impact of ESG score on the net income ratio, that terms out the operational cost of the firm. And the second hypothesis is the moderating one, how the region-wise situation affects this relationship that is already existing. Third one is to study the ESG relationship between the return on equity and the ESG. So the date. Okay. So the data was taken from Refinitiv Icon, that uses a high quality standardized ESG financial metric score, and the average age of the firms taken was 43 years. So it shows a diverse range of ESG scores that is ideal for robust regression analysis. And we have built a balanced panel data for 60 energy sector firms for 5 years. So it comes out as a total of 300 firm year observations. So these were the results of the descriptive statistics showing the average net income ratio of, see, the standard deviation of 56 shows that the net income ratio was varying between the 300 firm observations. That shows the data was sufficient to explain the variation that we were observing, that there is a operational cost that affects the overall financial performance of the firm. The correlation becoming negative as 0.0372 between net income ratio to ESG indicates or serves our first hypothesis. It shows that the net income ratio is negatively affected by the high ESG scores when firms are incurring cost in terms of ESG activities. So they are getting their profits less. So that affects their operational profitability. And this relation is mitigated by another lagged model that we introduced. So these were the 4 model results. Initially, that was 2.542. That was the main result for our study, and the result intensifies if we take this ESG as a lag variable in the 1 year. So it means that our cost is consistent. Our results are proving consistent with even more frequency if we take it a 1 year lag variable. But the same was not in the case of ROE. It means that the shareholders are not valuing the ESG activities so much, but that doesn't mean that the effect is not seen in the present, that it cannot be seen in future. So that means the negative effect of ESG on operation is persistent. We have taken the European buffer as well, so it remains statistically significant. But the Russian-Ukraine war outbreak serves as the mediating factor that says that if the negative impact is already being persistent, then it increases with the time. If we consider the Russian-Ukraine conflict in the study, then it more signifies. That means the result become more significant if we take that additional variable. Thank you.
Clarifications I would need to have. I hope you can hear me.
Yes, sir.
Yeah. One, you have taken a lagged ESG.
Yeah.
Yeah. Now you've taken 1 year lag.
Yeah.
How does this impact your results? Because you're saying it is not impacting. according to me, there will be some kind of an impact. Because if I take lagged, the impact could be a lot more on, let's say, some of the ratios which you have taken. That is one. The other is, you have talked about European countries having more stringent ESG measures.
Yes.
What do you mean by stringent? Has that impacted your research, or you're talking in a little more generic context? Because what we read is that the rules, when I talk about the ESG rules, the sustainability part, the sustainable development goals, they're not across all countries need to be following it with the same kind of parameters or same kind of efficiency, I would say. Maybe just two clarification.
Okay. The first one was regarding the ESG lagged variable. As you can see here, as I mentioned already, the ESG relationship is affected negatively. That shows that-
No, I'm not talking about results. I'm talking about your understanding and interpretation in a more real life.
So the relationship intensifies more if we take the lag variable. That means it proves out to be more significant. As it was negatively related already, but we take the lagged variable to check if this result stays consistent or it changes its value from negative to positive, but it stays negative and then it intensifies while taking the lag variable. That means our result was that the relation between ESG and financial performance was creating more operational cost for the firm. So they were losing money. Yeah. I have mentioned in the research gap that many studies have been mentioning the both relations, positive and negative, but I focus more on the negative one.
Thank you, Mohit, for that presentation. Very good in terms of the conceptualization using different metrics. I sincerely appreciate. Just wanted to check in the introduction part, you talked about ESG being a strategic asset vis-a-vis an operational cost. Where in the model have you incorporated the construct of strategic asset?
No, we were just checking that whether ESG comes out as a strategic asset if it provides more profitability to firms. But the results said the opposite, that the firms in the G7 countries, if they are following more initiatives related to ESG, then they are having initial operational costs. So we introduced lag variable to check that if this result comes out as consistent. So in the taking lag variables for 1 or 2 years, we have taken 2 years as well, but we left that out because the results were almost same. So that means the firms are considering huge operational cost due to investing in ESG. That stays out of the normal general standard picture that people follow, that incurring in ESG gives you benefit more in the short term. But in the ROE, that the second model, shareholders are not giving that much value to this relationship. So the results remain insignificant in that.
So what is the theoretical framework that you have applied for this study?
The framework will be to study the relationship only and not specifically any theory, but I have formed this framework to study that relationship, and introducing the moderating variable can affect my relationship. That is observed by intensifying the role that I already said, that in the crisis year, the relationship intensified.
Thank you very much, Mohit.
Sure, thank you.
Mustafa sir, any question from your side?
I have no question actually, to be very honest, and Dr. have already covered it in the other session chairs. I have only a suggestion. What I get from the title, it looks misleading to me, because when I saw the title, I thought this title have no contribution, relationship between ESG scores and financial performance, which is very generic. So either you include the moderating role of what the variable you used in the study, and that will make it more appealing. And rest of the things looks okay. And what the session chairs have recommended, I think this good one.
All right, sir. I'll incorporate the changes. Thank you, sir.
Good presentation. Well done.
Thank you, sir. I now request Ms. Sajda for her paper titled Decoding the Impact of Green Finance on Corporate Performance, an integrated bibliometric and systematic review of sustainable investment, to come and present her paper.
Good afternoon, respected chair and distinguished panel members. My name is Sajda, a research scholar from Jamia Millia Islamia. This paper is co-authored with Dr. Izhar Ahmed and Professor Muhammad Yamin. Today, I will be presenting a study titled The Impact of Green Finance on Corporate Performance, an Integrated Bibliometric and TCCM Framework. So moving towards, these are the outlines of the presentation. And here we discuss need, concept, and gap. So climate change has emerged as one of the defining challenges of 21st century, pushing governments, regulators, and firms towards sustainable development. In this context, green finance has gained prominence as it channels financial resources towards environmentally responsible activities. However, a key question remains for firms remains, does green finance actually improve corporate financial performance? Conceptually, the literature suggests that green finance can influence firm performance through three main mechanisms: lowering the cost of capital, promoting green innovation, and improving risk management and corporate reputation. Beyond regulatory pressure, the growing societal expectation for responsible and sustainable business practices, reflecting a broader vox populi, has further intensified the relevance of green finance for firms. Despite rapid growth of this literature, existing studies remain highly fragmented, context-dependent, and methodologically diverse, resulting in mixed empirical evidence. Moreover, there is a clear lack of integrated reviews that combine bibliometric mapping with theory-based synthesis, particularly in emerging economies context. This gap motivates our study, which provides a systematic and comprehensive synthesis by integrating bibliometric techniques with the TCCM framework. So moving towards the objective of study. So the first objective is to systematically map the literature, and the second one is to analyze the publication trends, influential authors, and leading journals, and finally contributing countries. And the third one is to examine the intellectual structure, and the fourth one is to apply the TCCM framework. So these are the research methodology that I have used. This study integrated bibliometric and systematic literature reviews designed following the SPAR 4 SLR protocol and the TCCM framework to ensure transparency and rigor. Data were collected from the Scopus database, covering peer-reviewed articles published between 2020 and 2025 in economics, business, and social science. The initial search retrieved over 11,000 records, which were systematically filtered following the SPAR4 stages after systematic screening and quality filtering. A final sample of 46 high-quality studies were retained. Bibliometric analysis was conducted using BiblioShiny in R to map publication trends and intellectual structure, while TCCM framework was applied to synthesize theory, context, construct, and methodologies. So moving towards research bibliometric results. So this figure illustrates the annual scientific production of green finance and corporate financial performance. The results show a sharp and non-linear growth, particularly after 2021, with publication increasing from just 46 articles in 2020 to around 800 articles in 2024. This inflection point indicates that green finance research has evolved from an emerging niche into a mainstream research domain. So moving towards the influential authors and foundational studies, a core group of authors drives continuous knowledge production Chang Changping and Zheng Dongyang emerge as highly productive scholars. On the other hand, the intellectual foundations of the field are shaped by a small number of highly cited seminal studies, particularly those by Gillen, Koch, and Starks. This indicates that while knowledge production is ongoing and cumulative, the direction of the literature is strongly influenced by a limited set of foundational works that act as intellectual anchors. So moving towards the thematic structure of the literature. So this figure presents the thematic structure of the literature based on keyword co-occurrence analysis. The first cluster shown in blue focuses on policy-driven green innovation and environmental economics. And the second cluster in green highlights sustainable development and firm-level financial performance. And the third cluster shown in red captures ESG, green bonds, and investment-oriented research. Overall, the evaluation indicates a progression from policy-led innovation to firm sustainability and more recently, ESG and capital market-oriented research. Consistent with a post-positivist perspective, these patterns suggest that context-dependent but systematic relationship between green finance and financial performance. So this slide tells about source dynamic, geographic distribution, and themes. So a small set of core journals, especially International Review of Economics and Finance and Journal of Cleaner Production, dominates the literature, which is further confirmed by Bradford's law. 7 minutes? Just 2 minutes. So geographic influence. The citation analysis shows a strong geographic concentration of green finance research, with China dominating in total citation, followed by US and UK. So thematic evaluation of the literature. The first motor theme that is identified with the literature, bibliometric analysis, is green finance, sustainable development, and China. And the second is ESG, sustainability, corporate social responsibility emerge as basic themes. And the third is environmental governance, social issues emerging as emerging or declining themes. And the fourth is green finance and green bonds emerge as transitional themes. So these are the TCCM results. The TCCM analysis shows that green finance research shows on diverse theoretical perspective, stakeholder and legitimacy theory dominate, emphasizing external pressure, ESG compliance, and reputational motives, while signaling theories explains how firms use green finance to reduce information asymmetry. Innovation-oriented views, including the Porter hypothesis and the resource-based view, examine productivity and competitive advantage, though findings remain conditional. Credit rationing and institutional and agency theories address financing constraints. Moving towards the context. So the contextual analysis shows a strong concentration of green finance research in China, driven by policy instruments such as green credit guidelines, which enable quasi-natural experiments and stronger causal inference. Evidence from developed economies is relatively limited and mainly centers on green bond markets. Sector-wise studies mainly focus on energy-intensive and polluting industries, as well as banks and financial institutions as key transmission channels. So moving towards the key variables, on the independent side, green credit policies dominate the literature, reflecting policy-driven and bank-centered nature of green finance, particularly in emerging economies, while green bonds and ESG measures are growing but remain secondary. Other instruments such as green innovation and carbon markets are relatively underexplored. On the outcome side, studies largely focus on firm and bank level financial performance, whereas environmental outcomes like emission and energy use are less frequently examined. Just 2 minutes. So moving towards methodological patterns. The methodological analysis shows that the green finance literature is dominated by quasi-experimental approaches, particularly difference in difference and its extension reflecting the policy-driven nature of the field. Panel fixed effects and dynamic panel methods are widely used to address endogeneity concern. In addition, event studies and efficiency models are applied in specific contexts such as capital markets and banking. So these are the themes which is identified based on TCCM approach. The first theme is green credit policy and corporate outcomes. And the second theme is financial performance and firm value. And the third theme is green bond and capital market. And the fourth theme is environmental and productivity outcome. And the last theme is banking sector and sustainability. So these are the research gaps that is identified on the basis of literature, drawing on both bibliometric and patterns and TCCM-based synthesis, several gaps become evident. The literature relies heavily on narrow set of theories. With limited integration across finance, strategy, and sustainability, empirical evidence is largely concentrated in China and other policy-driven contexts, which restrict broader generalization. In addition, research predominantly evaluates green finance through financial performance outcomes, while environmental and innovation-related impact receive comparatively less attention. So finally, these are the discussion and implication of the study. Taken together, our findings show that the rapid growth of green finance research after 2021 is driven largely by policy institutionalization and the rise of ESG finance with intellectual structure centered on green credit, green innovation, and ESG-oriented capital market. From a discussion perspective, green finance is predominantly conceptualized as an external governance and signaling mechanism. And in terms of implication, this dominance of stakeholder and signaling perspective suggests theoretical narrowness. So these are the references of the study that I have referred. Thank you for your time and attention. I look forward to your questions.
Thank you, Sajida. You
Thank
took
you,
us through the entire length and breadth of green finance on corporate performance. Did you also look at the impact of greenwashing?
No, ma'am.
Yeah.
I have mentioned in my research gaps
Mhm.
that companies may be greenwash their like they are showing we are going towards green, but actually they are not.
Yeah, exactly. That's
Yeah.
that's the point.
Yeah.
Now, you see, when you say green finance and corporate performance,
Yes, ma'am.
don't you think we are, in any case, when you say green, we are looking at society, we're looking at planet, we're looking at ESG. So
Yeah.
what measure of corporate performance in the study do you something which came across a lot more repetitive, or do you think you should have used that measure? Any idea on the basis of this?
I'm just exploring this topic. So
For your research.
yeah, ma'am.
Okay, so I think you should concentrate a little more on
Yeah.
the comparison with the traditional.
Yeah, ma'am.
That's where you will, because being green or not green is not a matter of choice. Now.
Yes, ma'am.
Companies have no choice but to go in green. And the
Yeah.
other would be the measure of corporate performance. I think that would be a good addition to your work.
Yes, ma'am.
Yeah, but you've done a good study. Okay.
Thank you, ma'am.
Thank you very much, Sajda, for that exhaustive, from 2020 to 2025 bibliometric analysis. Very well structured. The methodology, the process is very clear. So thank you very much. Just two questions from my side, just to tickle your thoughts. That's it. It's not a question. How do you understand these terms like green finance, ESG, sustainable development, and sustainable investments? Are they all the same, or do you see some differences in these terms?
Yes, ma'am. These are there may be difference, but I'm just exploring and that's it.
All right. So that's one area that I would like you to look into. Are these terminologies mean the same, which is a broader umbrella?
Yes, ma'am.
If you're looking only into green finance, or are you looking into, ESG vis-a-vis sustainability, does not necessarily mean the same. So
Yes.
that's some suggestion from my end. And from your findings, you mentioned that in terms of theory, you said it is weak. It is very
Yes, ma'am.
narrow.
Yes, ma'am.
May I know what made you come to that conclusion, and what are the other theories that, according to you, so many researchers missed? I'm just curious.
Ma'am, according to literature, very few theories are repeatedly used by researchers, like stakeholder theory, legitimacy theory, and resource-based theory. They're not exploring other theories.
So do you think they should just come out
Yes,
with
ma'am.
other theory?
Yeah.
Okay. All right. So thank you very much. So generally, when we develop research, we go with the established theory. So if you want to develop some new theory, maybe that could be your PhD
Yes.
topic. But yeah, established theories continue to hold true. So over to you, Mr. Mustafa, online. Thank you.
Hello, Doctor. Thank you. Thank you for the time. And thank you, Sajida, for a nice presentation. It was a good energy. I like the presentation particularly. Since you are from Jamia Millia Islamia, my institution, my alma mater, and say my regards to the doctors there, I have few questions and few suggestions. The first question, you mentioned about the bibliometric analysis, and at the same time, you have performed the SLR. So,
Yes.
whether this study is SLR or a bibliometric? Because the title suggests bibliometric,
Study.
whereas you are performing SLR. What is that?
So it's an integrated study like bibliometric and TCCM framework. Bibliometric for quantitative reviews like who are the influential authors, who are the contributing countries, and for TCCM for knowing the theories, context, and characteristics and methodology that have been used in the study earlier.
Okay, now I'm coming to a very core question, which I mentioned in the last presenter as well. What I observe, particularly the research scholars in India or the supervisors in India, and particularly in your research also, I do not find any gap. You are just repeating the same thing what others have done. So, did you list out the bibliometric or TCCM papers written by the earlier researchers in this domain?
Yes.
Green finance, and
Uh,
because I myself have, I think, authored maybe 2 or 3 papers on bibliometric and TCCM related to green finance, and I couldn't see my paper there. So what I suggest, you just do a thorough literature review on bibliometric or systematic literature review on green finance and corporate performance, and see what are those papers and what is the unique or novelty you are bringing to your research. So that would add a value, and that will push you, and that will help you to get into a good outlet. Otherwise, it looks just a repetition of the earlier research.
yes, sir. Sure, sir. I will definitely incorporate your suggestion into my study. Thank you, sir.
Thank you. And thank you, doctor.
Then-
I now request Ms. Riddhi Kapoor for her paper titled Impact Investing, a Bibliometric Analysis and Topic Modeling Using LDA to come and present the research paper. Also, I request all the presenter to do not exceed the time limit, please.
पहले भी पे डाल दो ठीक है डाल दो ठीक 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 शेयर कर दो अब
Good afternoon, everyone. My name is Riddhi Kapoor. I'm a full-time research scholar at ICACCF Amity University. I'm under the guidance of Dr. Shweta Rathore, ma'am. The title of our paper is Impact Investing, a Bibliometric Analysis and Topic Modeling Using LDA. So investing in businesses, organizations, and funds to create a positive and measurable social and environmental impact along with financial returns is termed as impact investing. So impact investing is growing in recent decades, and it has attracted a lot more participants and expanded just beyond the environmental impact to also include social and developmental aspects. So few impact investment options available to all of us are renewable energy projects, sustainable agriculture, green and social bonds, healthcare investments, clean water and sanitations, and other investments can include investments in schools, edtech platforms, vocational training programs, and human development capital programs. So few points to cite from the literature are, there are 5 core key clusters in impact investing research, that is sustainable development, sustainability, CSR, sustainable investment, and environmental economics. So impact investing have some synonyms, which are SRI, sustainable investing, triple bottom line investing, responsible investing, etc. So nowadays, investors, while constructing their portfolio, also keep in mind the social and environmental impact of the high industrialized nations. So theories like planned behavior, risk perception, investors' age, income belief, etc. influence their decisions towards SRI. So we have used VOS-Viewer and R-BiblioShiny along with the topic modeling. So in this study, we included 759 documents extracted from the scopus by allowing for the following filters. These documents span from 2000 to 2024, comes from a total of 237 sources, authored by 1,633 authors, where the single author documents are just 150, and international co-authorship is also increasing in this domain. And this report was generated using R-BiblioShiny. So document analysis is done on the following grounds: performance analysis, co-citation analysis, keyword co-occurrence, bibliographic coupling, and topic modeling. Performance analysis helps us find out the publication trend, top authors, top journals. So to find out how the scientific literature evolved over time, we generated this graph using Excel. Y-axis shows the number of publications, X-axis shows the years. So we can see that beyond 2018, there is an upward trend in the impact investing literature. And the positive equation of Y shows us that there is an annual increase of 16.79% in the publications. This table tells us the top 10 authors in the field, followed by their articles, their H index taken from Google Scholar, current affiliation and country taken from their respective LinkedIn profiles. This diagram shows that the first two authors are still active in the field. This diagram represents the top 10 journals. Journal of Business Ethics tops the lead with 102 articles, followed by Journal of Sustainable Finance and Investment with 69 articles, and Finance Research Letters with 25 articles. Bradford Law shows that main journals, there are few key journals in the field which holds the maximum number of articles. So the distribution of research is uneven. Co-citation analysis was done on references. So this network shows us the frequently cited papers, where each node represents a key author or the seminal paper. Lines connecting these nodes shows that these two papers were frequently cited together. And each color shows a distinct research theme, where red cluster focus on financial performance and asset pricing, green cluster focus on ethical and socially responsible foundation of the impact investing research, and blue cluster linked the corporate strategy and stakeholder value creation. Overall, the network reveals that the research is interdisciplinary. Then we performed keyword co-occurrence to find out the common keywords in the research. The network consists of 7 total clusters. An explanation to these clusters are mentioned in the next 2 slides, where green colored table corresponds to green cluster and blue colored table corresponds to blue cluster. TO is the total occurrence. TLS tells us the total link strength. DC is the degree of centrality, which tells us that how many other nodes that particular node was connected to. And EC tells us the importance of each keyword in the network. So first largest cluster is ESG, which consists of 15 keywords. Second is the SRI, which consists of 7 keywords. Bibliographic coupling shows a similarity among studies based on shared references, where larger nodes means more influential studies.
Time's up. Time.
Complete 7 minutes.
No, 5 minutes
Huh.
only. About.
Different colors are for different research themes. No, we were given 7 minutes, I guess. 5 minutes, first was a 5 minutes. And so topic modeling was done to group the words that frequently occur together. And we restricted our R code to, to calculate just the 6 topics. For each topic, we find out top 30 terms. Here in this table, we have took top 5 terms on the basis of the term frequency. And we have given a thoughtful annotation to each term. And these annotations represent the core research themes, which are SRI, portfolio management, sustainability, investor behavior, ESG, and impact investing. So in future, the researchers can link impact investment to behavioral finance to answer questions how time, location, behavioral aspects, different personality types impact investment decisions, and can also link impact investments to AI. So our results show that the impact investing research is diversifying into areas like behavioral finance, portfolio management, and sustainability. Our study suffers from the 2 limitations. The data was collected only from the Scopus database and it included only the English language publications. Thank you.
So thank you, Riddhi, for your
Ma'am.
presentation. Are you into your research or you're still deciding the topic?
Ma'am, I have decided the topic, but this paper was written before before deciding the topic. So my thesis topic is not this. So this paper I wrote when I was learning the bibliometric
That's what I
concept.
thought. Not your topic.
No, this is not my topic.
In the context of a lot of research themes and topics of interest,
Yes, ma'am.
from whatever I understand, there are a lot of regulatory uncertainties in impact investing across the length and breadth which you have identified. So in that context, we also look at some of the regulatory issues in impact investing, or it was just impact in the context of
Ma'am, no, I have not looked at the regulatory measures. I just find out the performance of the previous literature.
and any challenges which you think we as a country would face in terms of impact investment in times to come?
Ma'am, one of the drawback which I found was literature. Like many papers mention, sustainable investing, ESG investing, climate investing to be the synonyms of impact investing. But when I searched, like I found that these are not the synonyms. So this is one of the drawback in the literature which we should explore further.
Thank you very much for that, an overview on this topic. As a researcher, from this topic modeling, what were your key takeaways which you have carried forward to your research? How did the topic modeling help you to get into your research?
Okay, topic modeling helped us to find out the key research themes. So which I have
For
mentioned
you,
here.
I'm asking from your personal perspective, from this topic modeling, how did you go about funneling your next stage of research?
Ma'am, this paper I have not taken further
Okay.
because this is not my research topic now.
All right. So
Yes.
just to ask you on topic 5,
Yes, ma'am.
could you tell me what does that there more into mean? I'm sorry, I didn't get those words.
Ma'am, when I removed the certain stop words from the code, these words were not included, and this is one of the limitation which I'll improve.
Okay. All right. No worries. Thank you very much. Over to you, Dr. Mustafa.
Thank you, Doctor. Thank you for the time. Okay, Riddhi, it was a nice presentation. I have the same comment which I made to the earlier researchers. Maybe you heard it. First, nowadays it's very difficult to sell these review bibliometric and topic modeling papers. The reviewers or the editors don't like anymore because it has already faded in the market, so it's very difficult to sell. Second, about the novelty, because everybody is doing same thing, like actually what is your contribution to this research? If I could see it, it's all everything is done by the software.
Right.
So all this table, all these figures, diagrams are generated by the software. So being a researcher, what is your contribution? I don't find it, like unless you are very good in writing and explaining the things and the what you call different aspect of this topic modeling. Second, what was the what you call exclusion and inclusion criteria used for the research papers? Do you remember?
Yes,
How do you
sir.
filter out? Because many of the research I could see, they are the journals, the selection of journals are questionable. I would not say incorrect. I would say it's a questionable, because some journals are either predatory or the quality of work they publish is not of that quality. So how do you ensure that the work I'm going to review in my topic modeling, they are good, valid, and they are reputed?
So firstly, when I searched on the Scopus database with keywords, impact investing and bibliometric paper and performance analysis and topic modeling, I found just 10 papers, out of which only 2 papers were directly related to bibliometric studies on impact investing. And in those 2 papers, the topic modeling was not done. Secondly, sir, coming to the inclusion and exclusion criteria. So when we extend our bibliometric study to the SLR, that is systematic literature review, in that the authors follow the exclusion inclusion criteria. Because when we are restricting to only the bibliometric studies, we just download the data from the Scopus database. So that is my understanding. I did not include the inclusion exclusion criteria into this because I did not perform SLR.
Okay. So you have done the topic modeling and all the research which you have retrieved from the Scopus, or there was
Yes.
some criteria
Yes, sir.
used?
But topic modeling code was applied to the publication abstracts
Okay.
for these papers. Yes, sir.
Okay. Thank you.
Thank you, sir.
I have a small suggestion to the timekeepers. Please give them after 5 minutes indication so that they don't stress out too much. Please make it a little easier for them on the time. Thank you.
I now request Ms. Pooja Kaushik for her paper titled Green Finance as a Catalyst for Energy Efficiency, Empirical Evidence from Cluster of Asian Pacific Economics to come and present the research paper.
Okay, first of all, good afternoon, everyone who are present here, respective session chair and everyone. So today I am presenting my research paper. The title is Green Finance as a Catalyst of Energy Efficiency. This is an empirical evidence from a cluster of Asian Pacific economies. So myself, Pooja Kaushik, and I'm doing my PhD under the guidance of Dr. Neha Puri. She is my guide, and my co-guide is Dr. Amit Kumar Arora from Christ University, Bangalore. So basically, this study examines how green finance can be used to boost energy efficiency in a group of Asian Pacific economies. Due to the increased economic growth and high energy demand, this is a very key demanding topic in this region, and the research paper will analyze both short-run and long-run impact of green finance in terms of energy intensity. So basically, it also considers some of the macroeconomic and structural variables, which includes economic growth, urbanization, foreign direct investment, and renewable energy adoption. So basically, as we are talking about the research gap, till now there is insufficient comparative data on the role of green finance instruments towards improving the energy efficiency in this particular Asia Pacific region. So I have selected some of the subgroup of Asian countries which are energy intensive. And this paper will fill this gap by presenting empirical and multi-country data regarding the role of green finance as a motivator to energy efficiency with a subgroup of selected Asian Pacific economies. So these are the key research objectives. The first one is empirical analysis of short-term as well as long-term implications of green finance on energy efficiency. Second one is to determine how the macroeconomic and structural variables affect energy intensity in a cross-sectionally dependent panel model. Third one is to determine whether the green bonds help to improve the efficiency of energy in the energy intensive economies. So this is the conceptual framework. Basically, it explains how green finance mechanism works. So when the investor is opting a particular green finance for investing its money, so first of all, the green project must be identified. And then all the efforts has been done to enhance the utilization of green energy and to reduce the high energy consuming processes. So these will ultimately taken to the optimum structure of energy, and this will lead to the energy efficiency. So basically the conceptual framework is also supported by two big theories. These are financial intermediary theories, and second one is Porter hypothesis. These theories supported my conceptual framework via financial intermediary theory explains that the financial institutions, intermediaries have a great role in channelizing the investment towards green projects that supports green energy. For example, solar energy products, wind energy, and renewable energy supporting projects. Second one is Porter theory. This also supporting, this is a supplement theory for the green financial intermediaries theory. It suggests green innovation in the area. It also suggests that green finance can be implemented better if it is supported by the good regulatory policies. This is the summary of variable. So I have taken energy intensity as the core dependent variable, which is a proxy of energy intensity, and the data has been extracted from the World Development Indicators. Second one is green bond. It is a proxy of green finance. And second one, and this one is extracted from the Bloomberg database. This is the core independent variable whose effect we have analyzed on the energy intensity. Among the macroeconomic and structural variables, economic growth has been taken via GDP per capita. Then renewable energy share is taken as the proxy for clean energy adoption. Urbanization rate is the structural demographic variable. It also suggests the demographic pressure on the resources. And next one is foreign direct investment. So this is the total foreign direct investment effect is measured through it. It is a percentage of GDP. And all the macroeconomic and structural variables has been extracted from the World Development Indicators. Okay. Methodology. Coming to the methodology. So financially, for the initial diagnosis, I have applied descriptive statistics, then variance inflation factor, and then correlation analysis. For cross-sectional dependency and co-integration analysis, Passarin's cross-sectional dependency test, second generation CIPS unit root analysis, and co-integration test has been applied. And finally, for the short run and long run implications, CSARDL model along with the panel correction model has been applied. And then finally, to check the reliability of the results, robustness check was applied along with the substitution of major dependent variable energy intensity via energy efficiency score, and this one is extracted from the WB RISE database. So these are the key results and findings. The empirical finding indicate that there is a long-term co-integration between the variables, all the variables, and green bonds has a positive and significant impact on the energy efficiency. So as per our analysis, this is suggested that green bond issuance increase by 1% lead to the short run 13% and long run 26% increase in the energy efficiency. This will indicate that in short run, maybe there are some, increase in the energy efficiency, but in long run, it is supported by the 26% increase in energy efficiency. So basically the key results are highlighted in this table, in those tables. So first one is the descriptive table. This includes mean, standard deviation, minimum and maximum values. Correlation analysis supported that all the variables are having not highly correlated. They are having the under the acceptance value 0.8, not above 0.8. Third one is the table. Table number 3 includes variance inflation factor. All the values are between 1 to 5. This is the supplementary regarding correlation analysis. This supports this result. Last 1 minute. So this is the second generation panel unit root test. Why we have applied? Because while we are applying the cross-sectional dependency test, it is observed that most of the data are highly correlated with each other. And then we applied for second generation panel unit root test. It also suggests that the data are non-stationary at level, but stationary after applying first difference transformations. This is the supporting table for that, which leads to the Westerland co-integration test. This is also suggesting that there is the p-value of all the variables are below our acceptance limit, which is 0.05. That's why we have concluded with the CSARDL model. Okay. Thank you for reminding. Okay, thank you everyone.
Right. So, Pooja, once again, thanks for sharing your results with us.
Yes, ma'am.
just have one basic question.
Okay, ma'am.
When it comes to investing in green bonds or being compliant with the regulations, I mean, the way we read literature, it's a must. So probably if I'm in a company and I go for, let's say, raising bonds, nobody's going to help me with these bonds unless we ensure that they are being used for those 1, 2, 3, 4 purposes, which you have also specified. So I just want to understand how your results would be an addition to the existing literature and the understanding we have, because, I mean, there is no choice.
Yes, ma'am.
That's the way I'm putting it, for green bonds. And if my company is not going in for investment in green bonds, maybe nobody's going to give me the finance. In fact, I've heard a lot of young people who join companies would say, is your company compliant with the ESG regulations? Are you investing, so that the planet is saved? Otherwise, we are not going to join your company.
Yes, ma'am.
So that is just a observation, and I maybe would like to hear from you also. How would your results be?
Okay. Ma'am, basically, this is a major challenge among the investors, this how to decide where to invest their money, because most of the companies are actually, they are saying that we are going green, but they are not actually doing this. Greenwashing is the major key area which we need to analyze before investment, that whether actually the company is going to invest your money in the green. Second thing, most of the studies are having checking the impact, and basically in the European nations and G7, G20 economies, not under the region of Asia Pacific. The core, you can say, objective of doing this study is to highlight the policy regulations in this particular energy intensive region. This is energy intensive region because in Asian Pacific economies, they are consisting the huge percentage of world population, and their demand for energy is very much high. So it is the basically critical area that how to use the energy efficiently in its best possible way. I mean to say, like, minimum use of energy while maintaining the maximum productivity. So the core outcome of my study will be the policy implications, because as per my literature review till now, it is the major gap that green bonds or green finance is not supported by well-constituted governance regulatory frameworks. So this should be yes, ma'am.
We need to check that, because the kind of initiatives.
Nowadays, after the the 17 goals has been declared, UN has suggested each and every country to set up their own goals and standards. So this particular study is also a adding point to them, suggesting policy recommendations for this particular reason.
Thank you, Pooja,
Thank you,
for
ma'am.
that rigorous modeling that you have applied.
Yes, ma'am.
Could you share some details for me on the data sample? You just meant Asia Pacific. So.
Okay, ma'am. Yeah. Data sample. Ma'am, I have collected data from 2010 to 2024, and a cluster of 9 Asian Pacific economies has been included in this, which includes Australia, China, India, Indonesia, Japan, Malaysia, Philippines, Thailand, and Vietnam. And the data has been taken from 2010 because in this particular reason, Asian Development Bank has first issued their green bond in 2010, and up to 2024, because till now on the World Development Database, only data up to 24 has been uploaded.
So you've taken a panel data?
Yes, ma'am. I have taken a panel data.
So if you were to improve the model, what additional variable will you include so as to factor in the so-called institutional maturity that you were talking about?
Yes, ma'am. If I'm talking about the additional variables, I must add in my thesis, as per the Madhu ma'am suggestions, that I must go with the governance effectiveness and institutional environmental index, what they are applying and what are the policies currently running in this particular reason. I must include the government effectiveness index. Yeah, ma'am. That is also a good indicator. I must incorporate that in my thesis.
Thank you very much. Over to you, Dr.
Thank you.
Mustafa.
Thank you, Doctor. Thank you. It was a nice presentation. I think you are the student of Dr. Neha.
Yeah, yes, sir.
Yeah, she is a very good researcher. I know her personally. So
Okay.
most of the things are already incorporated in your topic and your research. Regarding the statistical tools, what are the tools you have used here in your research?
Okay. Basically, sir, descriptive statistics has been applied on the Excel itself. Correlation is on the Excel itself. But for the further tests like cross-sectional dependency, CIPS, second generation unit root test, and for the CSARDL model, I have applied all those tools on the Python.
On Python. So what are those tools actually? I want to know that because I feel there should be more robustness analysis and robust test, which will make it more like, comprehensive and
Sir, on the
journal-ready publication.
Python application itself, I have run all the you can say I have made the code for all the tests and I have applied the data.
Okay.
And for robustness, sir, I have substituted my major dependent variable, energy intensity, with the energy efficiency score. I have applied proxy alternate variable for the robustness to strengthen the reliability of my results.
Okay, very good. So you can, since your study is more related to the energy and green finance, I would suggest you can take the moderating role of policies. World economic policy and some policy measures which is available on Refinitiv, that will enhance it further. That's my suggestion.
Yes, sir. Definitely, sir. This is only the part of my study. During my thesis, I have applied some moderating variables as well.
Yeah. So as a moderator, you can use some policy like world policy uncertainty, and there are
As
different policy
yes,
variables
sir.
available.
As a
That will-
moderator, I will apply, as I said, government effectiveness and some policy indexes also to moderate my study. And from my thesis, only 4 variables are described in this particular presentation. 4 macroeconomic and structural variables. And during my thesis, I have 8 to 10 structural and macroeconomic variables.
Well done, Pooja. I really appreciate your presentation. It was good.
Thank you, sir. Thank you so much
Keep
for
doing the good work.
appreciation. Thank you.
I now request Ms. Nisha Goel for a paper titled Decoding Expert-Induced Behavioral Biases, the Mediating Role of Financial Literacy and the Financial Ecosystem to come and present the research paper.
Good afternoon, respected chairperson, distinguished panel members, and esteemed colleagues. My name is Nisha Goel, and it's my privilege to present my research titled Decoding Expert-Induced Behavioral Biases, the Mediating Role of Financial Literacy and Financial Ecosystem. The study examines how expert recommendation influence investor psychology and behavior, and how these effects are shaped by financial literacy and the surrounding financial ecosystem. Traditional financial theories assume that investors act rationally, processing all available information efficiently to maximize returns. However, behavioral finance research have demonstrated that investor decision-making frequently deviate from rationality due to cognitive limitations, emotional responses, heuristics, and social influences. These behavioral biases like anchoring, confirmation, representative, and overconfidence systematically distort how investors form expectations, assess risk, and make investment decisions. Rather than being random error, these biases are predictable and persistent, especially in uncertain and information-dense environment. This complexity has been further intensified by the growing influence of experts. These recommendations are widely perceived as a credible signals and that reduce information asymmetry and simplify complex financial choices and guide investor decisions. Investor often interpret expert advice and authoritative market signals, leading to excessive trust and reduce independent evaluation. Expert recommendation act as a behavioral trigger, reinforcing cognitive shortcuts and emotional responses. Our prior qualitative investigations reveal that exposure to expert advice activates several cognitive and emotional biases, which motivate the need for a deeper empirical investigation. And the role of financial literacy and financial ecosystem. The financial literacy play a crucial role in shaping how investors process expert advice. Higher financial literacy are better equipped to evaluate the quality, relevance, and limitation of expert recommendation, while those with lower financial levels are more likely to exhibit blind trust, intensifying behavioral biases, and beyond individual capacity. A supportive financial ecosystem comprising regulatory institutions, intermediaries, digital platforms, market transparent mechanism, investor protection framework can enhance informed decision making by the investors. Prior literature has documented presence of behavioral biases and market level effect of analyst recommendations, but important gaps remains, like the behavioral biases induced by expert recommendations and the intention behavior gap, particularly the mediating role played by the financial literacy and the financial ecosystem. The research objectives are to examine how the expert-induced behavioral biases influence investor intention and behavior, to analyze the mediating role of financial literacy and the financial ecosystem in the intention-behavior relationship, and to generate insights relevant for the policymakers, financial platforms, and advisors to promote responsible expert communication. The research methodology used is study adopts quantitative research design. Data were collected using the structure questionnaire. The questionnaire were pre-tested and refined to ensure clarity and reliability. A total of 415 valid responses were obtained. The data analyzed was conducted using the partial least square structural equation modeling. This is my research model, the 9 biases, expert-induced 9 biases, then its impact on the investment intention and behavior with the 2 mediators, financial literacy and the financial ecosystem. Then the results and findings. First is the measurement model assessment. It demonstrates strong reliability and validity. Composite reliability and Kornberg alpha value confirm internal consistency, while average variance extract values indicate adequate convergent validity. This is my result with Kornberg alpha and composite reliability. And this is the result of the hypothesis testing, the structural model findings. The anchoring bias has a significant negative effect on investor intention. The confirmation bias and overconfidence bias exert significant positive effect on investor intention. And the investor intention has a strong and significant positive influence on actual investor behavior. Then the mediation analysis result provide important insights, like the financial literacy partially mediate the relationship between investor intention and behavior, indicating that the knowledgeable investors are better able to convert intention into informed actions. Similarly, the financial ecosystem also act as a partial mediator, strengthening the intention behavior link by providing institutional support, credible expert input, and accessible market infrastructure. Next is the discussion. The finding reinforced behavioral finance theory, suggesting that cognitive biases distort rational judgment in environment characteristic by strong expert influence. Selected biases, particularly the anchoring, confirmation, and overconfidence, act as a dominant drivers of investor behavior. Other biases such as the availability, herding, loss aversion, and mental accounting were found to be insignificant, highlighting the context-specific nature of behavioral biases and the importance of the market structure and the investor experiences. Next is the implication. Theoretically, it integrates the signal theory with the prospect theory and explain the expert-induced behavioral mechanism, and practically emphasize the importance of investor education and responsible expert communication. And for the policy, strong disclosure norms, conflict of interest transparency, and the financial literacy initiatives. Lastly, to conclude, expert recommendation are powerful instrument in modern financial markets. However, when filtered through behavioral biases, they can significantly distort investor judgment and behavior. Strengthening financial literacy and enhancing financial ecosystem are essential to mitigate these distortions and promoting a healthier, more resilient investment decisions. That's all. Thank you. Thank you for your attention and patient listening.
So thank you, Nisha. Just one question. Who benefits from this study? Who's going to benefit from this?
Ma'am, retail investor that they make an informed decision without any biases. Financial literacy definitely help them to make a better decision if they are financially aware and literate. They can analyze the financial aspect, balance sheet, profit and loss account, rather than following the advice of the influencers. And they are literate, but not all, especially the young and novice investors. The number is increasing in India.
Thank you very much. Behavioral finance is a topic which I really enjoy. And thanks,
Thank you,
Nishka, for doing it. Clarify, just more of a clarification and your thoughts. The novelty of your research is the word expert induced. Am I right?
Right.
Yeah.
Yes.
So why do you argue that rather than just talking about behavioral biases, how does your study, be it in terms of construct, be in terms of the definition of the term expert induced or the variables used to measure that, how does that differ from a general study which generally talks about behavioral biases? So where is that expert element coming in? And why do you believe that all the biases which happens, even if it is not expert induced, that retains in your new model?
Actually, ma'am, there is lots of study on the behavioral biases, but the gap is about the expert-induced behavioral biases. For this, I collected the semi-structured interview data and done the qualitative study. Through this, I identify around 14 biases, which are induced by the expert recommendation, but I merge it into 9 on the basis of literature because of the overlapping nature of some biases.
With whom did you conduct the interview?
Retail investor.
Okay.
Indian retail investors
So
only.
which means the biases were from retail investors talking about experts?
Yes, ma'am. They are following the advice on social media or through Telegram channels on YouTube. Basically, the young generations is getting influenced by the fin influencer or the so-called expert.
And in your opinion, they are not reliable source of
Not
advice?
all, not all.
Okay.
There should be some disclosure norms.
For experts too.
Yes, yes, ma'am.
So
And responsible communication from the side of experts.
So may I understand that your fundamental assumption is experts are biased? Is that
No,
what you-
no, ma'am. Experts are not biased. Experts are acting as a market signal, or they are acting as a professional. Means the person who is listening their advice, they think they are expert. They have some expert knowledge. They are professional. They have some maybe they were able to access the information which they were not. So they are following their advice blindly.
Okay.
That is why they are inducing biases in their behavior, in their intention to invest, in their investment decision making.
Okay. So if you were to, strengthen this this research, how would you go about strengthening this for your findings? Is it through additional data or some thoughts on it?
Actually, this is a mixed research. First is the qualitative research through which I found the biases. Then I check these biases with the help of quantitative research with the use of PLSS-SEM with the data of 415 respondents, and identify and the result conclude that the 3 biases majorly or significantly impacting the investment decision making.
Did you see a difference in terms of gender, age, educational qualification in your results?
Yes, ma'am. This is
Since that was not brought out.
yes, ma'am.
Okay,
Yes, ma'am.
thank you very much. Over to you, Dr. Mustafa.
Thank you, Doctor. Thank you for the time. I like the research particularly because this has been one of my hypotheses about the research, or what you call expert-induced biasness, and it happens, and your findings prove that. So, as Doctor mentioned about. Can we make it more, comparative study based on the demography, like based on the age? As I said, it's the young population which is more induced. Did you perform any demographic comparison first? And second thing, what about the financial literacy with regards to the digital financial literacy? Because when you talk about the young people, it's more influenced by the digital technologies, and the financial literacy or the knowledge or the insights they are getting is through the technology. So can we explore further with regards to the digital financial literacy, as the earlier researchers mainly talk about the financial literacy in general? What do you think about that?
Yes, sir. The demographic, from the point of view demographic or the age criteria based, so there is a difference, but I did not check this on my data. And for the digital part, sure, definitely, sir. In today's environment, digital literacy is replacing more of the financial literacy. But for my research, I use in the broader sense, use the financial literacy as a mediator, not only the digital literacy.
Okay, very good. So since you, in your presentation and also in your answer to the experts, you mentioned about the young generation and the Gen Z generation. So when you talk about it, I think you should perform this demography with regards to the age and gender. That will give you a good result, I think.
Sure, sir. Sure, sir. Will do, sir.
Okay, thank you. It was a nice presentation. I liked it.
Thank you, sir. Thank you so much.
I now request Ms. Iram Khan for her paper titled Role of Climate Finance in Strengthening Resilience and Mitigating Risk in Global South, a thematic literature review, to come and present her research paper.
Good afternoon, everyone. Thank you to the session chairs and the conference organizers for giving me the opportunity to present my work today. My name is Iram Khan, and I'm a research scholar in the Department of Commerce and Business Studies in Jamia Millia Islamia. As it is my first academic conference, and I truly pleased to present my work in front of such a distinguished audience. So, as the topic of my research.
Kiran, I'm sorry to interrupt you. I cannot see your slides.
Now it's visible. Is it visible?
No, it's not. Who's your supervisor, Iram?
So Dr. Izhar Ahmed.
Okay. So you are the second scholar of Izhar here.
Yes, sir. Me and Sajda are under his supervision.
Okay, good.
Yeah. Thank you, sir. So.
Still, it's not there. I cannot see.
What's not there?
Now it's visible. Thank you.
So starting with this, with the title of my topic, the title of my study, that is Role of Climate Finance in Strengthening Resilience and Mitigating Risk in the Global South. And I conduct a thematic literature review of 50 peer-reviewed studies to examine how climate finance functions as a mechanism to resilience building and mitigating risk in the developing economies. Now, I will briefly outline the context within which this study is situated. As the literature highlights a clear global divide in climate finance outcomes, volatility in climate finance flows, fragmented policy outcomes, and persistent adaptation gaps in the global south reduce the effectiveness of green investments. In the developing economies, these challenges are compounded by frequent climate shocks, limited adaptive capacity, and physical constraints. Despite the growth in climate-label finance, its effectiveness, accessibility, and governance remain uneven, especially for the developing countries. It was mentioned in empirical studies which I was considered while doing this review. So moving to the theoretical foundation of this study, this slide outlines the key theories that explain how climate finance interacts with growth, risk, governance, and debt dynamics across economies. Like environmental Kuznets curve shows that relationship between the economic growth and environmental degradation. And in this review, another perspective of sustainable finance theory that explains how instruments like green bonds and ESG-based investments help in internalization of environmental externalities. Another theories like risk transmission theories, signaling theories, in which the green bond issuance acts as a positive signal to investors about a firm's future profitability and sustainability commitments. Another theory that is debt overhang theory. In this theory, the constraints based on the expenditure in low-income areas by high sovereign debt. These are the research objectives of my study. First, the study examined the role of climate finance instruments in mitigating climate risks and supporting the low carbon and climate resilient transitions. Another objective is to evaluate the effectiveness of climate finance related policy instruments and market mechanism. Beyond the policies and the instruments, the research also focuses to analyze the governance, institutional, and regulatory dimensions of climate finance. And the last one, to assess the extent to which existing climate finance architectures address or fail to address the resilience gap in the global south. Moving to the screening part, to ensure a systematic and a rigorous review process, this slide explains how the relevant studies were identified and screened. The literature review followed a structured inclusion and exclusion approach. Articles were selected from the Scopus and Web of Science databases covering the period from 2019 to 2025 to capture recent and relevant research. To maintain quality, only peer-reviewed articles published in Q1 and Q2 journals were considered and was limited to journal articles written in English. A set of carefully selected keywords such as climate finance, climate resilience, sustainable development, and so on was used to identify the relevant studies. After screening the relevant studies, the study adopted the Braun and Clark's 2006 six-phase model of the thematic analysis. First, the articles were read to achieve the familiarity with the data. This was followed by generation of initial codes, capturing the recurring patterns related to climate finance, risk, and resilience. In the next stage, these codes were grouped to search for the broader themes, which were then carefully reviewed to ensure consistency and relevance across the studies. Finally, these themes were clearly defined and named, leading to the production of final thematic review. These are the four broad themes which were grouped by relatable codes, leading to the production of these thematic review. And these codes were used to give these broad four themes. The first theme, that is starting with the first thematic finding of the review, that is the role of climate finance in risk mitigation. As the literature shows a broad consensus that climate finance plays an important role in reducing greenhouse gas emissions by supporting the low carbon investments and energy transitions. However,
5 minutes are up.
However, its effectiveness is highly conditional. Studies highlight that outcomes depend significantly on a country's institutional capacity and its exposure to climate-related risks. Finally, overall theme 1 highlights that while climate finance is essential for mitigating climate risk, its success depends on institutional capacity, exposure to physical risk, and imbalance between mitigation and adaptation priorities. The second theme focuses on the role of policy instruments and the impact of uncertainty on climate finance outcomes. The literature indicates that certain policy tools have shown a consistent positive relationship with the emission reductions, particularly in China and several G10 economies. But these effectiveness is significantly weakened by economic policy uncertainty and instability in climate policies. To address this, macroprudential regulations and central bank-led climate stress tests are increasingly being used to internalize the climate risk within the financial systems. Despite these developments, important limitations remain. Voluntary disclosure frameworks such as TCFD suffer from the selective reporting and limited comparability. Moving towards the next theme, that is the third one, the literature highlights the critical role of governance and accountability in shaping climate finance outcomes. A key issue identified is the transparency gap. The absence of universally agreed accounting standards allows donor countries to sometimes overstate their climate finance contributions. Institutional biases also emerge as an important concern. Overall, the evidence suggests that strong governance quality, particularly effective regulation and corruption control, can significantly buffer the destabilizing financial effects of climate risks. Moving to the final theme, the literature highlights a persistent resilience gap in the global south. A key finding is a strong mitigation bias in the global climate finance. Nearly 90% of climate finance continues to flow toward mitigation activities in high emission contexts. Okay. 2 minutes, just 2 minutes. The literature also identifies a dead climate trap, particularly in the regions such as sub-Saharan Africa, where rising external debt reduces the fiscal space required for the climate adaptation and resilience building. Overall, the evidence points to the need for reform, including a shift toward concessional finance, stronger adaptation and financing, and debt relief frameworks to effectively close the resilience gap. These are the 4 major identified research gaps while reviewing this literature. That is, first, there is a significant instrumental fragmentation. The second one is there is literature shows a strong mitigation bias with the adaptation and resilience remaining weakly conceptualized. Thirdly, the important governance gaps persist. And finally, equity concerns are evident as very few studies directly link climate finance to human development. Based on these findings, this slide I outlines the key policy and managerial implications of this study. That for policymakers, the literature suggests prioritizing debt-sensitive and concessional climate finance flows for high vulnerability countries. From a managerial perspective, financial institutions are encouraged to integrate climate stress testing into lending and investment decisions. And overall, the findings point toward the need for an integrated approach. To conclude, climate finance has grown in scale but remains constrained by the market failures and distributional imbalances. Without addressing the structural inequalities and debt sustainability, climate finance may inadvertently reinforce the existing global divides. Policy uncertainty and debt distress weaken the long-term impact of green investments, particularly in the developing and climate vulnerable economies. These are the articles, studies which were considered during my study. Thank you so much.
Thank you for your presentation. Keeping in view the time constraint, I think I'll refrain from asking.
Yes.
But thank you for your.
Thank you.
Iram, I'm just giving my feedback rather than asking you a question, because you're in the very first year of your scholarship. So novelty may be limited, but I assume this is for you to develop your research question. All right. But otherwise, what I liked is thematic was very good. Your themes are very clearly identified. Research gap policy, it is well done. The only thing is, what are going to be your takeaways from this? And has this process of thematic analysis helped you to identify your research question?
Yes, this will help me to identify my research area, as well as I have identified that there is a lack of integrated framework in which governance, risk, growth, all the points are considered in a single framework. So governance framework should include these all the components which are effective in climate finance flows to developing economies, as these economies are most affected economies because of developed economies. As the developed economies has committed that they will provide funds to developing economies, but they are not fulfilling their commitments.
Very good. I just would be interesting if you could have created a conceptual framework after this thematic analysis. So maybe that could be explored as your next step. Yeah, that's from my end. Dr. Mustafa, over to you.
Thank you, Doctor. Thank you for your comment. Yes, Aram, your work is good, actually. To be very honest, in the first year of your research and you are doing this much work, it's really commendable. Many congratulations to you and your supervisor.
Thank you so much.
Your title looks more like an empirical study. It doesn't look like a bibliometric or a thematic study. It looks more like what you call empirical, which is like, which can be improved. And as I told you earlier also, like, these type of studies nowadays is like, not sellable. It's very difficult to sell in the market because it's too much, everybody is doing it. It's easy to do, and the research scholars particularly are like, writing every day on one bibliometric paper.
Yes.
Regarding the topic, actually, I have worked a lot on climate finance and in like, emerging economies. So I suggest you to visit my profile on Google Scholar or Scopus. You will find few recent studies which I published, very much, very closely aligned to the topic you have mentioned in finance research letters and economics letters, above. So you will find there. I hope you have a good
Yes,
read.
I have already incorporated your one of the studies, like that was a recent one, Fortune the Favors. Like
Yeah, it was in, I think, yeah, it was
I
quarterly
have,
review of economics and finance. Yeah,
yes, yes, I have used that study in my this review, and there was the moderating role of ESG, I think.
yes. So you will find many more recently published in economic letters, finance research later, and research in international business and finance. So, and there are more coming up. So
Okay.
I hope you will have a good read,
Yeah,
inshallah.
sure,
It
sir. I
will
will
help you.
look into it. Thank you so much, sir.
Thank you.
I now request Mr. Tarun Kumar Jain, who has joined us online, to present his paper titled Sustainable Finance, Achieving Global Sustainability Objective.
Thank you. Am I audible to everyone?
Yes, sir. Yes, sir.
Thank you. Thank you very much for giving me the opportunity to join online. I am Dr. Tarun Kumar Jain from Daribad, Jharkhand. Directly coming to my topic, sustainable, achieving global sustainability objective. Finance is the lifeblood of our economy or any of the.
Dr. Tarun, if you can open your camera so that we can see
Oh,
you.
yes. Sorry, I forgot that. Yes. Yes, sir. Am I visible also to everyone?
Yes, mashallah, you are visible, very handsome. Good.
Thank
Go ahead.
you. Thank you. Thank you. Finance is the lifeblood of any economy. This paper explores basically sustainable finance, its market, products, and strategies to achieve global sustainable objectives. Very short look, what is sustainable finance? Sustainable finance is the conglomerate combination of financial decision and environment, social, and governance factors. It helps our capital to move towards investments and economic activities with positive environmental, social, and governance impact. Nowadays, companies are moving from short-term to long-term objective for value creation by integrating ESG factors into their financial decision making, thereby addressing global challenges such as climate change, biodiversity loss, and social inequality. Basically, I have gone through my paper has a comprehensive summary of World Investment Report 2025. This is very much a new topic for me, sustainable finance. Basically, I have done my PhD in 2000. I have completed my PhD in 2013. The topic was NPA. But after going through this topic, the topic sustainable finance, it attracted me a lot. And, afterwards, I will explain why I am written this paper and what I did. So the financial decision technology company is for their no doubt for sustainable growth. But nowadays, companies are talking about sustainable finance because it is the need of the time. It is not now that only profit and profit will be the motive, but we have to talk all about the development of the universe and not to become selfish for our profit. Coming to the ESG bond market growth and challenges, we can see that global sustainable finance grew sustainably, reaching over 8.2 trillion in 2024, which was 17% increase from 2023. However, this growth is posing lots of challenges, maybe because of investors' caution. The sustainable bond market surpassed around $1 trillion with record issuance, while the sustainable fund market reached 3.2 trillion but saw declining inflows. So lots of things are there. Market value, the total market value and value of sustainable fund both hit record high, indicating strong overall growth and demanding for sustainable assets. Despite the high value, there was increased investor caution, likely due to market volatility or regulatory changes. uh, Green bond issuance sector-wise contribution, we can see that the energy sector is at the top with 25%, consistent with 2023. Transport is the second at 19%, followed by building at 18%, and other details are given in my paper. Despite a slight downfall in the transport, overall issuance remains a stable key factor. Increased investment in adaptation projects is crucial as global temperatures surpassed 1.5 degrees centigrade in 2024. So coming to the next, that is Sukuk market. This is very much new to me. I have heard first time when going to this when I was creating this paper, writing this paper. The Sukuk market, you might all knowing this. Sukuk market started in 1988 from Saudi Arabia, and currently Malaysia is having the lead place. And this market is has shown a significant increase from $68 billion in 2015 to $212 billion in 2023, before a slight dip to $193 billion in 2024. Malaysia is at the top, and our very interesting thing that they are planning to have a new uh, uh, social stock exchange market, which is no doubt going to promote social justice and investment in healthcare and infrastructure. This is very interesting to not to invest in the market to have only profit, but the money will be invested for the well-being of the human being and the universe as a whole. This is a very nice. I very much like this
5 minutes.
market in the
Minutes left.
developing economies like India, because India is also a developing economy, and China and Singapore, very less percentage of contribution we can see from the.
Arun Kumar Sajin, I request you to please wind up within 2 minutes.
Yes, no doubt. We are right. So we can see that developing economies untapped potential. India is one of the important uh, country in this. Countries like China, India, and Singapore are not actively participating, but recently we can see that India is showing their active participation. Though in global market, we can see that very less contribution is seen from these countries. Carbon markets and voluntary carbon markets, no doubt they are very much important. Very much less time to go through these slides, though they are very big topics, having lots of points to be discussed. AI and ethics in sustainable finance. AI is a very important tool, no doubt, going from our household work to the corporate and making the policies, implementing the policies, and no doubt AI is going to help us to check uh, the plus and minus and all those important factors which will help us to achieve the uh, global objective of sustainable finance. India's role in green finance, rapid growth. Green finance in India has grown rapidly with financial regulators focusing on climate risk. Green bonds. India issued around $55.9 billion green social. Key institutions like NII, IREDA support sustainable infrastructure and renewable energy project policy to practice. India is the top three country for renewable energy investment, which projects like solar power plants for farmers, and overall it is in fourth position. India's role in this field. Conclusion: India has emerged as significant player in green finance, demonstrating rapid growth and policy commitment to sustainable development. and the substantial increase in greenwater solution and strategic investment in social like NIL and green. Recommendations strengthen policy frameworks, innovative green financial products, capacity building, global collaboration. Uh, thank you very much, Aniti and the whole team for giving me a chance to present my paper online. And I was going through this whole session of the different research scholars. It was very nice. And thanks to all the dignitaries of India and abroad. Thank you very much. Sir, any questions from your side?
Thank you, Tarun. I'm okay with your presentation. You've given a good rounded perspective of what sustainable finance is. I'm sure you can carry on your research in this area. Thank you.
Thank you, Tarun. Any of these topics, which among these subtopics you would like to go further and explore for your research?
Madam, as I said that I have completed my PhD in 2013. My topic was non-performing asset of SBI. And recently I have written one book also on this risk and resilience. But I've met Dr. Punita Madam. I think she is convener of this conference. We met in a group of CPA. We give coaching to the students, or basically give guidance to the students for CPA also. And when I gone through this topic, so personal my attachment was because my student, my son is doing ACCA from MIT Pune. So I intentionally went into this, and I thought that I should go to and I should present my paper. I मुझे मैं चाहता था कि physically present हूँ, but due to some reason I was not able to join the conference. But thank you again on the team for making this possible. Mustafa sir, if you want to ask anything.
No, thank you. Thank you, Dr. Jan, for the nice presentation. You are having a huge experience in this field. So, and I like the presentation. So, regarding the question, I would like to know, like, regarding the policies for the green finance in India. So, what has been the impact and what are the policies which has impacted in, fostering green growth or green finance in Indian economy? Because I would like to know that. I didn't work on Indian economy particularly. So, do you have any data or any idea about it?
I don't have any data and idea, but a general perspective, what I can say that in India, you know that there are two parallel governments, state and central, and we are very much, we can say that in problem of coordinating the two and having the same policy adopted by every state and the whole country as a whole. Politically or demographically, we are having some problem. But till today, I can say that not talking about the problem, talking very positively, our government, whether it is state or central, they are working on the policies and they are coming together for the betterment of the environment for the universe as a whole. And the important thing, what I think, according to me, that we should sit together and talk. Talking is important. Table talk is important with every person of the state and the central government and globally also. Because until and unless we talk to each other, we don't have a good relation with each other. The policies will be only on paper and it will not come on ground.
Yeah, actually, to be very honest, Dr. Jain, because I lived all my life in New Delhi, I studied in New Delhi,
Yes,
in
I
University
heard.
of Delhi, Jamia Millia and all. So I know Delhi very well and the around surroundings. So my concern is like, whether do we have policy? If you look at, the pollution in New Delhi and, surrounding
Yes,
areas,
yes, yes.
it's way too high. And green finance is one of the tool, which will, help us in terms of
Yes,
the
yes,
curbing
definitely,
the
definitely.
pollution. And, if you look at the top 10 cities in the world, we have maybe 7 or 8. Which
Yes.
is a shame for countries, which is a shame for countries like India, who's such on a rapid growth rate. So I would like to explore, whether the growth, comes and the cost of the growth is this, the pollution and the CO2 emission and the future generation. So are we like parallelly, growing as well as polluting the environment or sacrificing our future generation? So what about the role of green finance or the green investment. So whether it's like there or it's working and how it's working and how it's going parallelly, we are growing, of course. In India is one of the fastest growing nation. It's good. But at the same time, when I see these things, it really hurts. Thank you
Yes,
for
no
the
doubt, sir.
presentation, Dr. Tarun. It's a matter of
Thank you.
investigation and further exploration.
No doubt, sir.
I would like to take this
I
opportunity to
would like to
thank.
invite you all to come to Jharkhand. So come to Jharkhand. Jharkhand is a very green place, and we
Do
are
invite me, I
having
will come.
definitely, sir,
Do
definitely.
invite
We
me, I
will
will come to Jharkhand. I will explain. I never visited, although I'm from Bihar, by the way. I'm from Bihar, but I
Bihar,
never
Jharkhand
visited
is a part
Jharkhand.
of Bihar. We get detached from Bihar in
No,
2000.
no, originally I'm from Bihar. So I never visited
Okay,
Jharkhand. I would
so
love to. And I
which
would
place?
like to take this opportunity to thank Dr. Rashita. I hope to see you
Oh,
in Dubai soon,
oh,
inshallah. And
oh.
Dr. Madhu, it was really nice listening to you. And you are such an accomplished researcher and, speaker. It was really great to hear you both. Dr. Jan, thank you so much.
Thank you, sir.
Same
Thank
here.
you, madam.
Same here. Thank you.
We now move on to the certificate distribution ceremony for our paper presenters. At this juncture, we would like to acknowledge and appreciate the valuable research contribution made by our presenters. Your efforts, insights, and scholarly work have added immense value to this session and to the overall success of ICACCF 2026. I would like to request our respective session chairs to kindly join us for the certificate distribution. May I now invite the presenters one by one to receive their certificates. I request the presenters to please come forward as and when their names are announced.
And Sorry, camera off, है ना?
Camera off is I invite Ms. Nisha Goel for her paper titled Decoding Expert-Induced Behavioral Biases, the Mediating Role of Financial Literacy in the Financial Ecosystem.
Yes, sir. Thank you.
I now invite Ms. Pooja Kaushik for a paper titled Green Finance as a Catalyst for Energy Efficiency, Empirical Evidence for Cluster of Asia-Pacific Economies.
Yes, sir. Sir.
Next, I invite Ms. Iram Khan for her paper titled Role of Climate Finance in Strengthening Resilience and Mitigating Risks in the Global South, a Thematic Literature Review. May I invite Mr. Mohit Narang for his paper titled Exploring the Relation Between ESG Score and Financial Performance, Evidence from G7 Nations. Next, I invite Ms. Sajda for her paper titled Decoding the Impact of Green Finance on Corporate Performance and Integrated Bibliometric and Systematic Review of Sustainable Investment. Finally, may I invite Ms. Riddhi Kapoor for her paper titled Impact Investing, a Bibliometric Analysis and Topic Modeling Using LDA. Thank you to all the presenters for your valuable contribution and for making the session academically enriching. A big round of applause for all our presenters once again. I request session chairs to please come and speak 2-3 lines. मैम ने कहा कि उसके बाद
I'm actually also okay. So hi, I'm Rashida from the University at Chartered Accountant. In fact, I'm also doing my PhD and my final stages, so it's not yet a doctorate, just want to clarify that again. But very nice, sustainable investing, finance, these are topic that excites me. I appreciate all of your research, fairly rigorous. All of you have talked about some theoretical framework or the other. So overall, brilliant work. Some thoughts for you would be from what I don't know if you attended your workshops, 3 workshop sessions on theory development. Those are some topics that we would look into to incorporate your theory contribution to, development of theory. That's something you could look into. So with that, I think you guys are doing a great job. Fantastic, and keep it going. Thank you. Over to you.
No, just adding on, I'll tell you, it was a wonderful presentation. Each one of you had put in a lot of effort. And the fact remains, sustainable finance is the current area of interest. And a lot of times, we debate, is sustainable finance something like philanthropy? No, it's not philanthropy. And if you look at the kind of effort, a lot of companies like Apple, BlackRock, IKEA, I remember doing a case study on IKEA very recently. They are absolutely taking care of the circular economy, ensuring that, the entire set of products are reusable. And if you look at IKEA also, the way they're ensuring that their entire subparts or subcomponents tend to get used in the long run. And I would say in today's context, it's not a question of choice, And a lot of young generation, like the millennials, I've seen, they would join a company, but before joining, ask, is your company taking care of the ESG requirements? Are they taking care of, the sustainability part? And I think that's where we need to emphasize and focus. And once we have these kind of initiatives from our younger generation and also from the older generation, I think we would be all set to go. And green bonds or climate change or sustainability, I think those are not really the buzzwords now. They're something which are very, very necessary for our survival. But good luck, best wishes to all of you, and thank you for having us here. And a big round of applause for our presenter, for this team, which has done a lot of work. I think without you, this would not happen. Thank you once again.
Thank you so much, ma'am. I now request Dr. Neha Puri ma'am and Dr. Punita Goel ma'am to present the session chair certificates and memento to Professor Madhuvij. Dr. Mustafa sir, the conference team would send the certificates to you by post, and we would be very pleased to present you the memento in person whenever you come to India and visit our campus.
Yeah, surely, I would love to visit Amity, and I have just made an agreement with Dr. Neha Puri that I will be coming to Amity soon, in maybe July, August. Dr. Neha?
Dr. Mustafa?
Yeah. Yes, doctor.
Yeah, thank you, Dr. Mustafa, for being a session chair. And I think whatever suggestions you have given to our research scholars and the presenters, they will definitely incorporate the same in their research.
Thank you,
I'm
doctor.
looking forward to you to meet you in person soon.
Sure, doctor. I will visit you in June,
Thanks
July
for,
or August, maybe.
thanks for giving your time.
Thank you. I request all the research scholars to do visit my profile, because all of you are working on green finance and sustainability, and I have done a lot of work there. So please do visit there and have a look. It may be helpful to you.
Yeah, I will share your ResearchGate profile.
Yeah, okay. Thank you,
That
doctor.
will work out. Thank you.
Thank you.
Ladies and gentlemen, as we come to the conclusion of this session, I would like to take a moment to express our heartfelt gratitude to everyone who contributed to making this session meaningful and successful. First and foremost, I extend my sincere thanks to our respected session chairs for the valuable time, academic guidance, and insightful feedback. Your expertise and thoughtful observations have greatly enriched the quality of discussions and provided meaningful directions to our presenters. A special note of appreciation goes to the conference committee, Dr. Ashok K. Chauhan, Dr. Atul Chauhan, Professor Dr. Balwinder Shukla, Dr. Sanjeev Bansal. Conference conveners, Dr. Sujata Khandai, Dr. Punita Goyal, Dr. Pallavi Tyagi, Dr. Rishi Taparia, Dr. Harpuneet. Organizing committee, faculty members, coordinators, volunteers, and technical support staff, whose dedication and behind-the-scenes efforts ensured the smooth conduct of this session. As we move forward with the remaining sessions of the conference, we hope that the discussions and ideas shared today will inspire further research, collaboration, and innovation in the pursuit of sustainable and responsible business practices. With this, I formally conclude this session. Thank you all for your active participation and valuable presence. Wishing you a very enriching and productive conference ahead. I request everyone to please join for the tea in the foyer area. Thank you.
तुम तीनों की टीम बहुत अच्छी थी, वेरी इम्प्रेसिव.
Thank you, sir.
Yeah, next year also we will.
Excuse me. अभी एक और सेशन है. और सेशन है अभी. कहाँ चलेगी?
अभी एक सेशन और है यहाँ पर.
और आपकी फोटो भी मैंने निकाली.
To Technical Session 4 on Sustainable Marketing as part of the International Conference on Business Transformation for Sustainable Entrepreneurship and Value Creation. There's a quote that comes to mind with this theme. The best time to protect the future is in the present. In many ways, sustainability reflects exactly that, how businesses chooses to shape the future they want to be a part of. Today, sustainable marketing goes beyond promoting products. It is about value, responsibility, and long-term impact. The papers in this session explore these ideas through technology, consumer behavior, and strategic thinking. We look forward to an engaging session with meaningful discussions. To guide today's session, we are privileged to have with us Dr. Vinod Kumar, Professor of Marketing at the New Delhi Institute of Management. With over 21 years of experience in teaching, research, and academic leadership, he holds a PhD and MBA in marketing and has published more than 20 research papers in reputed journals. Sir, we are honored to have you with us today. A round of applause. Along with Sir, we have Dr. Pallavi Chaturvedi, Faculty Coordinator of ICACCF, as our second session chair. Okay. With that, I once again extend a warm welcome to everyone present here and online. I now hand the stage over to my co-host to take us through the presentation guidelines. Thank you.
Thank you, Jashmita. A very good evening once again to one and all present here. I'm Nimisha, and it is my pleasure to be a co-host for this technical session and I'll guide you through today's presentations. Before we begin, here's something to reflect on. Sustainable marketing indicates a shift from immediate gains to enduring value. And every strategy, every campaign, every consumer decision matters because every purchase we encourage today shapes the world we live tomorrow. With that perspective, let us dive into research that connects innovation with impact. First, let me go through the presentation guidelines for the participants. Number 1, every presenter will get 7 to 8 minutes of presenting time. Number 2, it will be followed by maximum 5 minutes of Q&A session by the session chairs. And number 3, please adhere to the timings as provided in order to ensure an equal opportunity for all. Now, let's begin with our first presentation. We would like to invite Mr. Mohammad Faiz Kamar to present his research paper titled A Prisma-Based Systematic Literature Review on User-Generated Content and Consumer Behavior. Please begin.
Good evening, one and all present here. Myself, Mohammad Faiz Kamar. I am a research scholar from Jamia Millia Islamia under the guidance of Professor Debarshi Mukherjee. Today, I am here to present my research paper on user-generated content and consumer behavior, a systematic literature review using ADO and TCM framework. So this study systematically reviews 79 empirical studies on user-generated content and how it influences consumer decision-making online. So by integrating ADO and TCM framework, it presents a process-based outcome of how UGC antecedents shape decisions and lead to purchase, engagement, and related outcomes. So user-generated content refers to any sort of content which is created and made available online by ordinary users, which is based on the experience, opinions, and emotion about brand and products. It is created without any financial motivations. So UGC is critical in consumer decision making because Web 2.0 had transformed consumer from a passive recipient of information into an active contributor of content in today's digital environment. UGC is perceived more credible than fund-generated content because it is based on user experience. Consumer use UGC to reduce risk and uncertainty in online decision makings. UGC influence purchase intention, impulse buying, engagement, loyalty, and word of mouth intention. So the research gap is that despite extensive research on UGC, the literature remains fragmented and inconsistent. Findings are disparate across disciplines and platforms. Studies examine isolated variables rather than a single process-based decision-making journey of consumer. There is no integrated framework that integrates ADO and TCM framework. There is limited synthesis of theory, context, and methods. So the research objective based on this research gap is that systematically synthesize UGC research using an integrated ADO CCM framework, identify key antecedent decisions and outcome shaping consumer behavior, map theories, context, method used in UGC research, compare the effect of UGC and FGC on consumer outcome. So so the methodology followed here is systematic literature review, which is a qualitative research based on secondary data. This work is a framework-oriented domain-based review. The domain is consumer behavior, and the framework is ADO and TCM. A domain-based review approach was selected because UGC research is widely dispersed across discipline and lacks an integrated structure. This review followed a Prisma-based guidelines to select the paper used in this analysis. During the data collection, Scopus and Web of Science databases was used. The time period was 2015 to 2025. Only peer-reviewed journal were selected. Subject area was marketing, psychology, and social sciences. Language was English. During the initial search 816 articles were retrieved. During the screening process, 166 duplicates records were removed, which led us to 438 unique articles. During the eligibility process, non-empirical studies were excluded, like reviews, bibliometric data, and meta-analysis. Studies without consumer as a unit of analysis were also removed. Articles where UGC was not a core variable were also excluded. Studies not examining consumer behavior were removed, and final eligible studies selected based on a conceptual alignment with the IDEO and TCM frameworks. So the final inclusion sample was of 79 empirical studies. This is a Prisma flow diagram showing the process of how 79 studies were selected. During the identification process, 816 records were identified, and after applying Boolean filters, 604 remained. Then after removing duplicate 434 articles, during the eligibility criteria, we selected only 79 papers. So the bibliometric profile of the review studies showed that 79 articles were distributed across 61 different journals. Most prolific journal was Journal of Marketing Communication and Cogent Business and Management. Each will have 5 articles. After that, consumer in computers in human behavior have only 4 articles, and rest of the 58 journals had only 3 to 1 articles. So the temporal.
Sir, I would request you to wind up in 2 minutes.
So the temporal distribution show that there was limited studies between 2015 to 2017, while there was steady growth from 2018, there was a peak in 2025. And the journal quartile distribution show that 54 studies were published in Q1 journals, 8 studies in Q2, 11 in Q3, and 4 in Q4. So the ADO framework-based finding shows that antecedent, first one is antecedent, which shows the factor that influence how consumer perceive and evaluate user-generated content. It was divided into 3 core categories. First one is content-related, second one is source-related, and third one is individual-related. During the decision mechanism, I classified decision into 3 core categories. First one is cognitive, second is affective, and third is attitudinal and trust-based decisions. And the outcome is divided into 3 core categories. First is purchase related, engagement related, and brand related. And the TCM based finding showed that the SOR framework was the highest applied in research with 12 studies. Second is ELM model with 8 studies, and UGT theory with 6 studies. Theory of planned behavior in 3 studies. Social identification and social influence theory were used in 3 studies each. And persuasion knowledge model was studied used in 2 studies. The context shows that context refers to the situation that shape the setting in which research is conducted. They encompass the broad environment, including socio-economic, cultural, and situational conditions that influence how a study is framed and interpreted. USA had the most number of studies, followed by China, Vietnam, and India. Platform for Facebook was the most studied platform, followed by Instagram and YouTube. And then regarding industry context, electronics and technology with 9 studies, fashion and luxury 8 studies, tourism and hospitality have 7 studies. Regarding the method, there was 71 studies regarding quantitative techniques, 2 studies qualitative, and mixed were 6. Regarding the analytical technique, structural equation modeling was widely used. PLSM used more than CBSM. There was a growing use of text mining, sentiment analysis, and big data analytics. This is a conceptual framework which shows that different number of theories which were used, the context, the method, and the various antecedents which were used, and its related decision and outcome. So this is the conclusion that 79 studies were distributed across 61 journals. There was sharp growth after 2021, driven by digital acceleration after COVID-19 pandemic. The majority of the studies published in Q1 journal indicating strong scholarly rigor. Regarding antecedent, content quality, valence, vividness, and perceived values, along with source credibility, homophilia, and antecedent are strongest driver of UGC effectiveness. Regarding outcomes, there was purchase-related outcome, engagement-related outcome, and brand-related outcome. Findings from the TCM show that the research is dominated by SOR and ELM framework, which highlight cognitive, effective processing, and dual route persuasion. Research concentrated in USA and China on visual and interactive platforms such as in fashion, tourism, and technology sectors.
Yeah. It's very comprehensive, it seems to be. I would be asking you a few questions.
Yes, sir.
hopefully you can answer those questions, and on the basis of your understanding, like you took a deep dive into the UGC and FGC. My questions to you is like, if you talk about user generated content, what is the control the company can have on user generated content? Because it's the customer, it's the user who can write anything and everything on the platform. And that could be damaging to the image or to the brand of the company.
Yes, sir.
What is the mechanism the company have that they can control the content which is generated by the user?
There is one mechanism which is called influencer marketing, which is a paid sponsorship post. Companies sometimes use pay consumer to post anything content which is positive about the company, which creates favorable image. Otherwise, there is no other way which can create a favorable image about the company. There is called public relation, where companies pay user to generate more positive publicity towards the company.
No, see, influencers marketing is a paid, it's a sponsored,
Yes, sir.
right? You're talking about the user generated content. The user generated content is anybody and everybody can write anything about your brand. Okay, what is the control mechanism company can have? Otherwise, it's so fatal. That is my question.
Regarding the control mechanism, there is no any policy regarding.
How you can leave a company like this?
Sir, so the government can.
It should be governed by. Is there any
Yes, sir.
regulation?
No, there is no.
There is no regulation.
No, sir.
So here is the gap.
Yes, sir. There's the
I
gap.
think you could consider that as a gap of your research.
Yes, sir.
And that is one of the biggest gap. Okay, what are the other gaps you find out? Out of all, which gap you think that this is the real gap which you have identified over the literature?
Sir, the real gap is that there is inconsistent findings between what content is more effective. Some research says that form generated content is more effective than UGC. Some say that UGC is more effective than FGC. But it depends on context. When there was a COVID-19 pandemic, research show that the form generated content is more effective than UGC. While there are some situations where UGC is more effective than FGC, like online gaming and fashion context, UGC is more effective than FGC. So the finding is that there should be a balance between FGC and UGC, depending on the context. The balance should be on firm or company.
See, is not in the hand of the firm.
Yes, sir.
Take care of only FGC.
But through public relation and PR campaign, firm can and make positive attitude toward itself.
The last question, what is the deep research which you did on UGC and FGC? What is your overall takeaway?
Overall takeaway that is consumer is slowly moving away from the fund generated perspective and integrated user generated perspective before making any decisions. Thank you. The Boolean operators were first one English language, second one is regarding the subject area like business management, psychology, humanities, and arts. No, these were the filters, Boolean filters, which were applied. Yes, but these were applied in regarding subject area, business management, arts and humanities, psychology, information sciences, marketing. And the year was 2015 to 2025. English article and peer-reviewed journal, only articles were selected. Book reviews, conferences, proceedings were reviewed. No. Inclusion criteria was that only peer-reviewed English related articles were included in the studies from 2015 to 2025, from Q1 to Q4 quartile indexed journals. Yes, ma'am. So this was not the key theme of my research. I presented a brief overview of the bibliometric analysis of the findings. My key theme was ADO and TCM framework. There was already researchers on the GC which have done bibliometric analysis. So for novelty perspective, I used ADO and TCM framework. So the contribution is that there should be a balance between origin of content. The content is, as you all know, that the content is king. There should be a mixed balance between all the sources of content. There is a growing prevalence of artificial intelligence content. So the firm should use a mixed balance of firm generated content and consumer generated content and AI generated content. Thank you.
We now invite Ms. Tanishka Chauhan to present her paper titled Understanding Green Consumerism Through the Lens of Environmentalism. Please go ahead. Last one. Here. Last one.
Good evening, everyone present here. My name is Tanishka Chauhan, and I'm a full-time scholar of Amity University, and my department is ICACCF, that is Amity Institute of Commerce and Finance. And I'm in first year, and I'm doing my PhD under the supervision of Dr. Harpunit Singh Kohli. He is the professor in our department. My topic is understanding green consumerism through the lens of environmentalism. Introduction, sorry. The growing global environment crisis has strongly influenced the consumer thinking and behavior. Climate change, population resources depletion, and biodiversity loss have increased awareness about environmental damage caused by human activities. They are gradually shifting from, consumers are becoming more conscious about the consumption choices as they are gradually shifting from traditional buying patterns to more sustainable and environmental responsible practices. Green consumerism has emerged as a key response for these environmental concerns, and if it refers to the purchase and use of products that minimize the environmental harm, and it also supports the ecological balance. These are my research objectives: to understand how environmental attitude influence green consumer through purchase intention, to understand how environmental knowledge influence green consumer green purchase intention, to understand how green purchase intention influence green consumer buying behavior. These are the research questions of my paper. What factors influence consumer green purchase intention towards environmental friendly products? How does environmental attitude influence consumer green purchase intention? How does environmental knowledge influence consumer green purchase intention? And how does green purchase intention influence green consumer buying behavior? In my paper, actually my paper is a working paper. It is not completed yet, and the result is also ongoing. So I have adopted theory of plant behavior in an extended way. So TPB is used as a base theory which is extended to explain green consumer behavior, and green purchase intention represent the behavioral intention component of TPB. Environmental attitude replaces the general attitude to reflect eco-friendly evaluations. Environmental knowledge is added as an extension to strengthen the intention formation. And consistent with TPB, green purchase intention leads to green buying behavior. These are the LR that I have studied, and I am studying more about each constant, more papers. These are the papers which I have studied on these particular constructs. This is my conceptual framework. I have taken environmental attitude and knowledge, which influence the green purchase intention, and it leads to the actual purchase of buying behavior of eco-friendly products. These are my research hypotheses. Environmental knowledge have a significant positive effect on environmental attitude. Environmental attitude have a significant positive effect on green purchase intention. And environmental knowledge have a significant positive effect on purchase intention. My methodology is research design is a quantitative and descriptive research design. Theoretical framework is based on TPB, that is theory of plant behavior. Key construct studied is environmental knowledge, environmental attitude, green purchase, green consumer buying behavior. The data type is primary. The collection is structured.
and I have done the survey in like I have done the survey in question in the form of questionnaire, and I have taken 7 points Likert scale. First is strongly disagreed, and 7th is strongly agree. Sample area is tier 1. Technique is convenient sampling, and respondents are above the age of 18. And time period, the sample size is collected around 150 to 200 consumers. The sample size I am expecting to 300 to 350 consumers. So the collection is ongoing. I'll be using various tools for my analysis. I'll be using SEM analysis as well. And I will be conducting pilot study through Conback alpha and face validity. The expected result, these are the results which are based on these research papers. Like these are the research paper, they have already given these result as well. So I'm expecting that I will also getting these type of result only. So I've mentioned the paper as well, cited the paper of author citation I've given. Thank you. Yes, sir.
It seems to be that your paper is in the very nascent stage.
Yes, sir. Yes, sir. I've just started working. I've just completed my coursework last semester, and I'm like working from 2 months only. Yes, sir. Yes, sir. Yes, sir. Yes, sir.
Intention leads to purchase intention, attitude leads to intention purchase.
Yes, sir.
1,000 times.
Okay, sir. Sir, I'll add new components as well.
Direct influence on the relationship between these three.
Yes, sir.
They have to explore those relationships.
Okay, sir. Okay, sir. Yes, sir. Okay, sir. Yes, sir. Yes, sir. Yes, sir. Okay, sir. More comprehensive. Okay, sir. Okay, sir. Yes, sir. Yes, sir.
Even they will say, okay, it has been done. It's overdone. Get it?
Yes, sir.
So if it's something which is overdone, there's no newness into it. So try to find out something new, something unique, some appealing idea so that whenever you present, it seems like something new you have created in yourself.
Okay, sir.
Right?
Yes, sir.
Probably you need to spend time more on research.
Yes, sir. Yes, sir.
That too is the current research. And then you further design your conceptual understanding.
Okay, sir. Sir, I'll work on it.
Exponents above 18 years.
Yes, sir.
There's no upper.
Sir, no, sir. Upper limit is not. I have not put any upper limit. My basic is that the respondent should be above 18 because, you know. So because above 18 do a lot of shopping as well. Like they have their own opinions. They.
One, let's say 18 years of age, the another one is 80 years of age.
Yes, sir.
So how you will make a comparison between the two?
Okay, sir.
Right? So try to make some brackets within which you have to recruit the responses, which would be somewhere similar to.
Okay.
Right?
Yes, sir.
Frames are, let's say 18 to 25 years of age.
Hmm.
Maybe they are very much similar in mind being. Or probably you can take up like 30 to 45 years of age.
Okay, sir.
So this bracket has to be there so that you get a consistent outcome.
Okay, sir.
Of your response.
Okay, sir.
So you need to work.
Okay. Thank you, sir.
After we complete our research work, we make certain generalization about the target population. So what is your target then? So we put it on the ground. As sir has said that there needs to be an age interval to the target, and then for that you're going to make the generalization.
Oh.
So that you need to define.
Yes, ma'am.
And other questions that I asked, I also wanted to ask how that conceptual framework. So you said that you're using the overarching theory is theory of planned behavior.
So it has different variables like attitude, subjective rounds,
Perceived control, yes, ma'am.
What is the reason to that? And you said that you're going to extend TPV. You're going to enhance the predictability of TPV. So how will you do that? Your model is very basic and simple. As Sir has correctly said that it has been researched multiple times.
Yes, ma'am.
So what is the newness in your model? So that
Ma'am, I'll
we
work on
think
it.
about it.
Yes, ma'am. Thank you, everyone.
Okay, all the
Thank you
best.
so much. All the best.
Now I would like to invite Dr. Merin George, who is joining us online to present her paper title, A Study on Challenges in Achieving Sustainable Marketing Practices and Economic Resilience in Duck Farming in Kerala, with a special reference to Kottayam district. Please go ahead, ma'am.
Hello. Hello. Hello, am I audible?
Yes, ma'am, you're audible.
Okay. Good evening, everyone. I think, Madam, please, can you please display my slides?
Yes, ma'am, just a minute.
Okay. Yes. Okay, let me start my presentation. I hope I am audible. Good evening, everyone. I am Marin George. I'm a research scholar in economics from Kerala, doing research under the guidance of Dr. Shojarani BN. Today, I will be presenting my paper titled A Study on Challenges in Achieving Sustainable Marketing Practices and Economic Resilience in Duck Farming in Kerala, with special reference to Kottayam district. Next slide, please. Introduction. Duck farming plays a vital role in Kerala's rural economy, providing income, employment, and nutritional security. The sector is dominated by small and marginal farmers who depend largely on traditional marketing systems. Despite its potential, duck farming faces several market-related challenges that makes farmers economically vulnerable. Next slide, please. Sustainable marketing practices refer to fair pricing, stable market access, value addition, and reduced dependence on intermediaries. Economic resilience means the ability of farmers to withstand market shocks as the price fluctuations and seasonal demand changes. Strengthening sustainable marketing practices is essential to improve farmers' income stability and long-term sustainability of the duck farming sector. Next slide, please. Statement of the problem. In Kerala, duck farming constitutes an important component of the rural agriculture economy. It provides both primary and supplementary income for a large number of small and marginal farmers. The sector also contributes to household nutritional security and generates employment opportunities for rural populations. Despite these advantages, duck farmers continue to face several challenges in achieving sustainable marketing practices which directly affect their income stability and economic resilience. So it becomes essential to examine the challenges associated with sustainable marketing practices in duck farming and assess their implications for economic resilience of farmers. Next slide, please. The study was designed with two key objectives. First, to identify the challenges faced by duck farmers in achieving sustainable marketing practices in Kottayam district. Next, to suggest policy measures to strengthen sustainable marketing and economic resilience in duck farming. Next, please. Methodology. The study was conducted in the Kottayam district in Kerala. A total of 50 actively engaged duck farmers in the district selected through random sampling. For data collection, both primary and secondary sources were used. Primary data were gathered through a structured interview schedule, while secondary data were collected from government reports, published articles, and earlier studies, etc. Next. Results and discussion. Next. In the case of product diversification, the results show that a large proportion of farmers, that is 42%, are engaged exclusively in meat production, while 80% focus only on egg production. At the same time, 40% of farmers produce both meat and eggs, indicating that a considerable number of farmers adopt diversification strategies to enhance income and reduce risk. Next, please. When we consider market access, 36% of farmers sell their products directly to consumers, whereas 32% rely on middlemen, and the 32 use a combination of both channels, reflecting a balanced marketing approach aimed at ensuring better market reach and sales stability. Next, please. With regard to value addition practices, we can see that all farmers limit their activities to the sale of dressed meat only. None of the respondents are involved in processed products, packaging, or branding, which indicates the absence of advanced value addition and limited scope for product differentiation. Next, please. When we consider the adoption of modern distribution channels, 66% of farmers reported using platforms such as online sales or digital communication methods or WhatsApp. However, 34% of farmers still do not use modern channels. This indicates digital marketing adoption is moderate but not yet universal. Next, please. In the case of cooperative membership, a majority of farmers, that is 72%, are members of cooperatives, while 28% are not associated with any group. This shows that cooperative support plays an important role in the marketing and functioning of duck farming for most farmers.
Ms. Marin, you have
Next,
to
please.
wrap up in another 2 minutes.
Okay, ma'am. Next, please. When we consider seasonal fluctuations in market demand, we can see that 78% of farmers have experienced seasonal fluctuations in the market demand for duck products, and 22% do not face any kind of market fluctuations in market demand. Next, please. Next slide. When we consider the challenges faced by duck farmers, several factors affect the sustainability of their marketing practices and economic stability. Farmers experience income uncertainty due to demand fluctuations and depend heavily on middlemen, while the use of digital platforms and modern distribution channels remains limited. In addition, minimal value addition, low adoption of modern technology, weak functioning of cooperatives, lack of cost-based pricing, and inadequate policy and market information further constrain the economic resilience of duck farming. Next, please. When we consider the policy implications of the study, there is a need for institutional support to strengthen the marketing system in duck farming. Measures such as promoting cooperative marketing, improving infrastructure, encouraging value addition, and enhancing digital literacy can help farmers access better markets and reduce dependence on intermediaries. In addition, regular training, insurance support, disease management, and timely market information are essential to improve farmers' income stability and long-term sustainability. Let me conclude my presentation. Duck farming remains a vital livelihood activity in Kerala, but its long-term sustainability is threatened by market instability and structural marketing challenges. Strengthening sustainable marketing practices is essential to improving farmers' economic resilience and income security. Targeted policy support, digital integration, and institutional strengthening can transform the sector into a more stable and sustainable rural enterprise. This is all about my presentation. Thank you for your time and attention. I'm grateful for this opportunity. May God bless all of you. Thank you all once again.
Ms. Marin,
Yes, sir.
can you hear us?
Sir?
Can
Yes,
you-
yes, I can hear you.
All
Yes,
right.
yes, sir.
Okay. Throughout your presentation, we could not see the research methodology which you adopted. We could not see the theoretical framework. At the same time, we could not find any scale which you have adopted. So
Yes, sir.
how did you collect the data?
I collected data through random sampling. I personally visited farmers and collected data from them, and I didn't use any kind of theory in this. I exclusively prepared these slides for this presentation. That is why I did not adopt any kind of complex theory like that.
Okay, but we could not see, like, you must have prepared the questionnaire on the basis of certain scale you have adopted from somewhere, right? So have you adopted any scale from any other research?
No, actually, no scales at all. I prepared this as a part of my research. So, as a part of my pilot study.
Right.
I didn't use any scales.
See, in research, whatever comes to your mind, you cannot put it into in the format of questions. Like nothing goes with your own perception. It has to be documented somewhere in terms of scales, which has been developed and verified before.
Okay, sir.
Okay, so we could
Okay.
gaze out what on what basis you made these questions for the respondents. This is one thing which we find it missing. Second is uh, in the duck farming, the challenges. How did you come to know these are the challenges? Secondly,
Okay.
already you have mentioned that the highest number of the duck farmers they are using digital channels.
Yes, sir. Yes, yes, yes.
So what's the
Most
challenge?
of them are using.
More than
Most
7.
of them are.
So they are already
Uh,
using. So what are the other
yes,
challenges
sir.
we could see?
Sir, they are using platforms for just basically, not in a, I mean, they are using platforms like WhatsApp just for passing the information regarding their sales, like that. Still, 34 of the farmers still do not use these kind of modern channels. They are still using the traditional methods to sell
And
their products.
okay, and secondly, uh, this is a problem which exists all across the Kerala state.
Yeah.
But why you restrict your research for one specific district, which is Kottayam?
Actually, my research topic is about southern districts of Kerala, which is more enriched by the duck farmers. But I selected Kottayam just for this paper only.
But why? If it is a generic problem which exists everywhere across your state, why you picked up one district only?
Yeah, actually, sir, maybe that is a mistake from my side. In my research, I'm collecting data from all the southern districts, that is 5 districts, and I just randomly selected Cotton district and prepared a paper for this presentation only.
No, Miss Marin, the question
Yeah.
is, from where you collected the data? Only from one district, which is Kottayam, you have mentioned?
Yes, sir. Yes, yes, yes.
That is my question, that why you restrict your research in
Oh,
only?
oh, okay. I got it, sir. Kottayam is the largest um, duck farmer population located.
Okay, so that is the rationale behind the largest number of.
Yeah, yes, that's it. Duck farmers is in Kottayam district.
But the farmers in the other districts may have a different challenge than the Kottayam farmers.
Yes, sir. That is possibly possible.
How you can generalize your research?
Uh, yes, sir. That is a problem.
Anyways, your research is interesting. Okay.
Yes, sir.
You go further deep into it and try to make it rational. We find something that rationality is missing in this research.
Okay,
It's
okay, sir.
not to find a fault, just to guide you. If
Okay.
you could, maybe you must have done, you have identified certain scale and you did justice to your research, but probably you are not able to tell right now. If it is
Okay.
not done, you had to do it. And if it is not done, still you can further add into it.
Okay, sir. I value your suggestion and I will do it in my next
Yeah,
presentation.
and secondly, I think we could not see the research methodology also here. Analysis,
I know, sir.
how did you make the analysis?
Okay, I just took the basic tools like percentages. I didn't use any kind of complex methods for the data analysis.
I think this analysis can be done with the help of Excel only. The pie chart, bar chart that can be made.
Yes, sir. Yes, sir.
Yeah. All right. Okay. Thank you so much. All the very best.
Thank you, sir. Thank you so much for your suggestion. Thank you all once again.
Hi, Merin. This is Dr. Pallavi. I have few observations about your research work and a few questions. So first, I would like to ask you, as you mentioned in your PPT also, that you have collected data through schedule. So I just wanted to know that like the targeted audience was farmers. And as you mentioned in
Yes.
your earlier slides also, that you have categorized them as small and marginal farmers. So I just wanted to understand that is there any criteria for that? One. And secondly, what challenges have you faced at the time of data collection from farmers?
Okay. And for your first question, yes, sir, there was a categorization. I referred a work by Sanad Muhammad from Bangladesh. He did a study regarding this duck farming, and I referred it. And in that study, small farmers categorized as duck population. They have 0 to 250. Then medium farmers like 500 to 1000. Large farmers as
Sorry
population
for the
who
interruption.
have.
Can you please give us a
Okay.
little more clarity about what do you mean by this 250, 500?
It's a flock number, flock. The number of birds they have.
I missed that. Okay.
Okay, number of birds they have. And regarding the data collection, it was very difficult to locate the farmers because they are not, they are like scattered around, scattered over the district. So first I have to visit the veterinary hospitals and collected the contact numbers and address from the doctors as the registered farmers in that hospital. Then I have to call them, and then I had to meet them and collected the data. This was the most difficult task I faced during the data collection.
Okay, Marin. Now, few suggestions. Vinod sir has already highlighted many things. Like your research is timely and relevant, but it lacks rigor. So you need to go through for you need to go for an extensive literature review before proceeding for your data analysis part or your modeling. So you need to go for extensive literature review, and probably that will give you a better idea of how to that will give you a better perspective to look at your research problem. And further, through that literature review, you can hypothesize, you can find out variables, you can decide a conceptual framework, and then you can decide about data collection and data analysis part. And maybe you can use statistical methods for validating and for understanding how actually the problem is. So with the help of those statistical analysis, maybe you can approach your problem in a better way and you can address it in a better way. Okay, thank you so
Okay,
much.
ma'am.
And
Okay.
all the best for your
Thank you.
future.
Thank you. Thank you. Thank you, ma'am.
Now, our final presentation for this session will be by Mr. Dheeraj Sharma on role of perceived risk, social influence, and value perception in driving electric vehicle adoption intentions in an emerging market. The floor is yours.
Good evening, sir, and good evening, ma'am. My name is Dheeraj Sharma. I am doing PhD under the guidance of Dr. Pallavi Agnihotri, ma'am. This is my working paper, and this is my. I am presenting my paper for taking your suggestion that will be benefit for me in future for making this paper more effective. The title of my this paper is Role of Perceived Risk, Social Influence, and Value Perception in Driving Electric Vehicle Adoption in an Emerging Market. The introduction of my topic is that as climate change worries rise, limiting reliance on fossil fuels has become crucial. India has committed to reducing the emission by 2030 and reaching net zero by 2070 because the transportation sector contribute about 15% of greenhouse gas emission as per Niti Aayog report 2025.
Previous research indicate that consumer adoption of new technology like electric automobile is significantly influenced by perceived risk, perceived value, and social impact. Perceived risk, including financial performance and infrastructure uncertainty, also has a significant impact on EV adoption in emerging nations. According to recent research, perceived risk decrease the judgment about value and the dramatically decrease EV adoption intention. I am using the unified theory of acceptance and the use of technology too, UTOT2, given by Vacantes, is a widely accepted theory framework for explaining consumer adoption of new technology in freely usage context. UTOT2 extend the origin UTOT model by adding the consumer-centric term like price value, hedonic motivation, and habit, making it particularly useful for examining advanced consumer technology like electric car. This is my research gap. Many studies have explained electric vehicle adoption using model like UTOT2, but most of them mainly focus on technology benefit and infrastructure. Fewer studies have examined perceived risk, social influence, and value perception together in one model, especially in emerging markets like India. Also, there is limited research using as extended UTOT2 model that include perceived risk to understand EV adoption intention. Therefore, more research is needed to clearly explain how risk, value, and social factor jointly influence EV adoption in an emerging economies. This indicates a clear gap for existing literature review in understanding the combined role of perceived risk, social influence, and value perception in driving EV adoption intention in emerging market. UTOT2 fit in my research by explaining how benefit and motivation drive EV adoption intention, while perceived risk capture the uncertainty that restrict the adoption. Together provide a comprehensive framework for studying EV adoption intention in an emerging market. This is my research question. Research question 1, how do UTOT2 factor influence consumers' EV adoption intention? And second one is, how do perceived risk influence consumer intention to adopt electric vehicle in an emerging market? And third one is, does perceived risk mediate the relationship between perceived risk and electric vehicle adoption intention with an extended UTOT2 framework? This is a literature review. And this is my hypothesized conceptual framework. I am using UTOT2 model with extension perceived risk. This is a proposed hypothesis. Perceived risk is significantly related to value perception. Value perception is significantly related to electric vehicle adoption intention. Performance expectancy is significantly related to electric vehicle adoption intention. Effort expectancy is significantly related to electric vehicle adoption intention. Social influence is significantly related to electric vehicle adoption intention. Facilitating condition is significantly related to electric vehicle adoption intention. Hedonic motivation is significantly related to electric vehicle adoption intention. And perceived risk is significantly related to electric vehicle adoption intention. And last one is value perception mediate the relationship between the perceived risk and electric vehicle adoption intention. This is a proposed methodology. The research design quantitative theoretical framework UTOT2. The key construct study perceived risk, social influence, and value perception. And data type primary data, tool for primary collection, structure questionnaire, and measurement scale, 7-point Likert scale, sampling area tier 1 cities, sampling technique convenience sampling, mode of data collection online, and sample size expected sample 3 to 400 consumers. Time period of data collection expected 3 months. And statistical tool use SAM analysis and CFA. Pilot study conduct to assess the reliability of the instrument. And expected outcomes are performance expectancy and price value are expected to have a strong positive influence on EV adoption intention, and social influence is likely to play a significant role in shaping adoption intention and reflecting the importance of social approval and status in emerging market. Facilitating conditions are expected to positively influence the adoption. Perceived risk is likely to have a significant effect on EV adoption intention. Among perceived risk dimension, financial and charging infrastructure risks are expected to be the strongest barrier. The extended UTOT2 model is expected to show higher explanatory power than the original UTOT2 model. And thank you.
Dheeraj, your topic is really it's a trending topic.
Yes, sir.
But there are flaws. Although it is in the beginning of your research, which you've just started, I think.
Yes, sir.
How many research paper you have studied so far?
50 plus, sir.
50?
Yes, sir, 50.
Out of 50, how many you find that they are really relevant to your research?
Actually, sir, I have studied according to UTOT2 model is used many researchers, but with the extension, we can do something new.
Okay. So initially, on the basis of your literature review, you identified there are multiple factors which play a very significant role in deciding and adopting e-vehicles.
Yes.
Okay. Since I'm a user, I personally as a user of e-vehicle, I understand what are the various factors which need to be considered before adopting e-vehicles. First is infrastructure, which you categorically mentioned about it.
Yes, sir.
Okay. So charging infrastructure, which is still in the very initial stage.
Yes, sir.
And the user of e-vehicle, they really find a challenge for that.
Yes, sir.
Okay, that's big.
Yes.
But you have not mentioned in your theoretical framework that point. You have only mentioned about perceived value, perceived risk, I think.
Yes, sir, perceived risk.
So,
Actually,
वो
sir,
मेरा
all
दूसरा
risk-
question होगा.
Yes.
But पहला question ये है, expected outcome also you mentioned very strongly about the infrastructure.
Yes, sir.
Right? But you did not consider it as part of your theoretical framework. This is number one question. You please answer.
Actually, sir, infrastructure problem also covering perceived risk.
How?
Because the perceived risk have a
What are the different variables you will cover under perceived risk?
Financial risk, infrastructure risk, and a cost risk, and a charging problem.
So perceived risk is a construct. It has multiple variables.
Yes, multiple
But
variables.
you did not show in the framework. Can you show the theoretical framework? Just go back the slide. The model which you have made. Yes.
Yes, yes.
Okay. So perceived risk. You
Yes.
did not mention the various variables
Yes,
over here.
I didn't mention.
Right? So
Okay.
you have to mention if you
Okay, I will-
consider infrastructure as one of them and there are 3, 4 more, then definitely you have to show as a variable, and for every variable, you have to have a scale.
Okay, sir. I will, sir.
Okay.
Okay, sir.
So for that purpose, you need to do more literature review. You have to
Okay,
go
sir.
for more
I am
LR,
doing
which
so.
relates to perceived risk. Okay.
Okay, sir.
And for the perceived risk, how many variables you are considering? For that also, you should have a scale.
Okay, sir.
So
Thank
that should be part of your model.
Okay.
Secondly, the way you have designed it, it looks, don't you think, what is the gap in this model? You tell me. No?
No, sir.
It seems to be incomplete model.
That's why, sir, hypothesize conceptual. I did not
No,
find all this.
it-
I did not find.
I'm not finding any flaw into it, but I'm just suggesting for that. I'm just taking your attention towards those areas that you need to work upon this. Okay. It seems to be incomplete. There has to some more variables which can be a mediating or a moderator variable at the bottom side of this model.
Okay.
Okay. So that it will become a complete model.
Okay, sir.
एक ही दूसरा तो दो ही चीजें मुझे इसमें लग रही हैं
Okay, sir.
जो इसमें है बट इट इज अ वेरी इंटरेस्टिंग रिसर्च दैट यू कुड मेक इट
Thank you, sir.
बट एक चैलेंज इसमें अगेन देयर इज वन मोर चैलेंज लाइक UTAT 1 UTAT 2
Okay.
again it has been very much researched about टाइम तो ऑलरेडी बहुत खराब हो चुका है, तो वो अच्छी बात है आपने यूटेट लिया, यूटेट का भी यूटेट 2 लिया, बट यूटेट 2 का एक्सटेंशन में व्हाई इट इज relevant to your research, that also have to be seen.
Okay.
ठीक है?
Okay. Thank you, sir.
Okay.
Thank you, sir. Thank you so much. Okay. Thank you, ma'am. Thank you, sir.
Then not any.
Thank you, presenters, for your wonderful research and your presentations. Now we would like to move forward with the memento distribution ceremony. I would like to call Atul sir as well as Pallavi ma'am to give the memento to Dr. Vinod sir.
सर आप लोग थोड़ा आगे आ जाइए, लाइट आ रही है आप लोग के फेसेस पे।
आप भी दोबारा आ गई। Thank you, sir.
Moving on from the presentations, we would now like to now like to thank honorable chairs and presentees for their valuable time and efforts. We would now like to present certificates of appreciation to our respected presentees. I invite Mr. Mohammed Faiz Kamar to kindly come on the stage and receive his certificate. A big round of applause for him.
Can we switch off the?
May I now request Ms. Tanishka Chauhan to please come forward and receive her certificate. Last but not the least, I would request Mr. Dheeraj Sharma to receive his certificate.
Sir. Sir.
Congratulations to all the presenters. I just want to let the online presenters know that e-certificates would be provided to them. I request all the presenters, faculty members, and volunteers to kindly come forward for a group photograph.
Power off. हाँ ठीक ठीक बस वो हो गया okay.
Everyone, please come forward for a group photograph. What we witness today shows us that sustainability is far more than a business buzzword. Yes, it is a mindset, one that is redefining how organizations think, act, and grow. Each paper we heard today added a valuable dimension, connecting academic rigor with practical relevance. With immense gratitude, we once again thank our respected session chairs for their time, wisdom, and thoughtful evaluation. We extend our heartfelt appreciation to every presenter for their effort, preparation, and scholarly contributions. Our special thanks to Dr. Pallavi Chaturvedi, Faculty Coordinator and Department of ACCF, Amity College of Commerce and Finance, for making this session possible. Now, I would like to invite Professor Dr. Vinod Kumar to come up on this podium and say a few words.
I have already spoken a lot during the presentation hours. I believe you are good going, and I could not find anywhere that something is lacking. You are very bright people, but yes, there could be a possibility that who have just started research, uh, there could be some gaps. Those who are at the advanced level could be better, but it doesn't mean that there is some gap in the capabilities. Okay, so you all are very bright. You are on the right platform with the right hands, and they are the torch bearers. So follow your guides for the guidelines, and hopefully in the times to come, you will come out with something unique research, unique ideas that will add value to the literature. And in the coming time, all the scholars who will be doing research in these areas, your research could be the milestone research. Okay. So with these few words, I wish you all the very best. And I would like to thank you to ACCF, to Dr. Pallavi, Dr. Atul Kumar, and to all my colleagues for inviting me here for this session. And it was really wonderful to watch your presentations. And thank you so much and all the very best. Thank you.
Thank you everyone for being such a wonderful audience. And with this, we formally close technical session 4, the sustainable marketing.